You.
What up, boy?
How you living?
I'm good, man. I'm good.
You look tired. What you do
I
now?
feel good. I feel it's a Sunday. I feel good, man.
You look tired though. You had a long night.
Nah, not really. I actually fell asleep earlier than her.
All right,
That's
let's
usually
talk.
the way opposite.
All right, let's talk money. Okay, so
What it is about that intro, bro, but every time it does it for me. Like that joint gets me turned every time. I don't know.
all right, we might as well bring the man of the hour in. It's good,
Yeah,
Pizzle.
see,
What's good? What's good? How y'all doing?
You ain't think you was coming in first.
You said what?
I said you ain't think you was coming in first.
I mean, once I heard the intro part, I was kind of like, he might. And then you threw me in there. It's like, oh, what's up? How y'all doing, man?
what up, boy?
Everything
I'm
good?
How are you?
Not bad, man. Ready to talk some money. Ready to see what's lining up for the week. So that way we can go ahead and put some plays in place.
Yes, sir. You got some big energy right now, KP. I like it.
Yeah, man. Just gotta keep it real.
How was the wedding yesterday?
It was a 70th birthday shoot. So it was a little different than a wedding. It was my coworker's mom's 70th birthday. So it was all the way out like by West Virginia. But it was fun. It was a hike, but I like to drive. I like to get out there and see the scenery. So it worked.
Yeah, you do like driving. You probably the most drivingest dude I know.
Yo, I love it. As long as it's a long trip, I'm good.
Nah, Kellz drive more than KP.
You said Kellz drive more than KP?
Yeah, I believe it. Because Kellz always on the road.
That's for work.
Always.
You just be driving.
You just drive to drive.
Yeah, I just drive. I just like to drive. That's it. Especially in the countryside. Like, get me out in the country. Yes.
Nah, I can peep that. No, I can respect that because it's nice seeing different scenery that you've never seen before. Like it's like peaceful.
Exactly.
When I first moved to the country, at first, like I was like, "What the heck?"
Yeah.
But you realize, bro, like it's really not that much stuff around me. It's I just get to see like the earth in its natural state, like animals doing stuff. So I can understand why it's common, especially when I lived in California and like the mountainsides. My brother came out and visited me on the one time, and I was like, "Yo, these mountains are beautiful." He looked at me like I was crazy when I said that joint. Like, and then the next time he came out, he was like, "Yeah, like I can see what you mean. This we don't get to see this in Jersey.
Yep.
Like, we don't get to be on a highway and just see crazy mountains like driving. So it's just a different perspective."
Mm-hmm. That's real.
All right, country boys.
Bro, what are y'all talking about?
Hey, bro, that was dope.
Yeah, I had a moment right there.
The country connection. Man. We might as well keep it going, bringing in the current country boy.
Why not?
As soon as he said current country boy, I knew what it was.
You knew what time it was. Good, Dad.
Hey, real talk, bro. Yo, for us to be some young, positive black men out here really focusing and learning, bro, together, bro, that remind me of the HBCU love right there, man. A lot of people don't know, but when it's all positive black men and y'all all on the same mission, that joint is real, bro. Real.
Very true. Very true. KP, you got another shout out.
Okay. Okay. Thank you, Portia. I appreciate you.
I don't know where Carol's at. I guess he'll be back.
Probably working.
Let's jump smack into it. So I know a couple of y'all wasn't here last week. I don't know if y'all watched it or not, but we stepped our game up by kind of taking it to presentation style. So we got some tips for beginners, including a quick review from last week. Another tip or two that you can add to your arsenal, your trading arsenal. And then we'll get into trade review from last week and some trades that we see coming up currently. So first, just a reminder, make sure y'all follow us, please. If you're watching us, you probably already follow us, but hit the like button, hit the share button. Please help
Subscribe.
us get the message out. Subscribe. We would appreciate it because our mission is to serve people. So the more people we can get in front of, the more people we can help, the more people they can help, and the cycle continues. So please make sure you like, share, subscribe, follow all the social media stuff. Learn with us, Game 7 Academy. That's our official tutoring and mentorship business. Tutor, like, of course, school, K through 12, some college tutoring, mentoring, K through however old, stock market, school, the whole gambit. So make sure you learn with us through our Game 7 Academy programs. In addition, shop with us, game7shop.com, t-shirts, hoodies. We got the mat, sweaters, jackets,
Masks.
on. KP got something on. I got something on.
G got something on.
I got something on. Got the undefeated on today.
We gotta get you right, Devin.
We're gonna send you a care package.
I gotta get right. I'ma invest.
Game7shop.com. And finally, train with us. You have a personal development that includes physical and mental health. We're doing free workouts every Saturday morning, 8 o'clock on Zoom. We post on like Thursday or so. Hit the DM for the link. We're not going to make it public, just hackers and all that kind of stuff, but hit the DM for the link. Feel free to join us. And we're also doing a call this Wednesday on YouTube and Facebook where we're going to teach people how to set goals. So Goal Line program, we're doing some free things now, but we also help schools, colleges, different entities with their physical and mental health.
I missed the Goal Line yesterday. How many people joined? Because I feel like it's been growing every week.
Yeah.
We had some new people, but then also some people wasn't there that's been coming.
Okay.
I think it's like 15 to 20 or so.
That's a good number, though. That's a good number.
It's wrong.
Okay.
Yeah, that ain't bad. We just got to keep challenging people to bring people.
Right.
Mm-hmm.
One more thing I want to say before we get into this. Anybody that's in the chat watching live, drop your email address because we've been working on some literature to go along with some of these presentations that we're doing every Sunday. So if we can get your email address, we can start sending you out some of the things we're working on. I won't speak to it too much right now because we're not finished with what we're going to be sending on a regular basis. But if we have your email address, we can add you to that mailing list.
Very true.
It's on it.
All right, so some tips for beginners. We'll fly through the first couple because they're from last week, and you can just go back to our YouTube channel, check out last week, and you get like running through at your own pace. The first thing you got to do, get in the game. We suggest the Webull app, find some charts, go to paper trading, which is more or less fake money in the real market. They give you $1 million to trade, and you'll get a return as if it was the actual market. So do some paper trading, and we primarily talk options. You'll probably, I don't want to say never, but very, very, very rarely talk about us buying a stock and selling it. We'll almost always talk about buying an option and closing the option later. So to have an option outlook on Webull paper trading, you want your number to be red for a put. That's a prediction that the stock will go down. And you want your number to be green for a call. In layman's terms, that's a prediction that the stock will go up. All right. So step one, get in the game. Step two, make some plays. Find the stock you trade. And we're going to give you some of our new tips today to help you find some stocks. So find the stock you trade. Start with the news and fundamentals. Technical analysis is what you see us do with the charts and the lines and the predictions and counting the days. All of that is technical analysis. Sector Spider is a great resource, highly recommended from Pizzle. We reviewed that last week, and we may touch on it again this week. But it essentially breaks the stocks down into the different sectors, the different categories, so you can be particular about where you look. Once you find the stock, draw the play. So zoom out, draw your resistance lines at the top, like the little hump at the top of the hump, and draw your support lines at the bottom of the hump. All right, you want to zoom all the way out so you can see the last couple of years or so. The stocks don't do nothing but repeat as they grow or as they decay. Then after that, zoom into current day, and then repeat the same process if you missed anything. And then if necessary, draw some trend lines and make your move. A call, you think the stock is going up. A put, you think the stock is going down. Once again, I know that's very fast, but this is live streamed on YouTube. Just go on YouTube, pause the video, take some notes, get a play in the shot, and repeat. I hear myself echoing on one of y'all. Step 3, get your head in the playbook. Right? This is not something you can just pick up from YouTube. This is not just something that you can even pick up from a book. This is not something that you can pick up from a step-by-step how-to. You have to use all of those. But my personal preference would be to start off reading books. When I got jammed up, I read 3 books. I had a totally different understanding, at least of the language. So as I started watching the videos, as I started paper trading, I had an understanding of what's going on. I think about it was game 7, so we related to sports. But just imagine watching football, like we all get the gist of it, but then imagine taking a class hypothetically with KG and learning about football from an NFL athlete. You'll watch the same thing with a totally different perspective. So take some time to get in the game. You tripping if you think you're gonna get this from us or anybody's YouTube or something like that. This takes a lot of time. And just all of the work that you're seeing from us today, collectively, more or less, we've been going hard for like 8 months, which is not long in the grand scheme of things. But when you do things with the game 7 mentality, where you do it every day, no matter what, no matter how you feel, no matter what your mom did, your girl did, your boyfriend did, your husband, whatever, you'll be surprised at how much you learn. Stop Netflix and chilling and start learning and growing. You feel me? You'll be surprised at how things click for you so easily. Next step. So here goes a new step. Using watch lists to find the stock. So more or less, a watch list is like your group of favorites. Like you go on Netflix and you put add to my list, a movie you want to watch later, a documentary you want to watch later, or whatever you want to watch later. That's a watch list. But that's for movies. This is for stocks. So first thing you want to do is scout the big dogs. These are called ETFs. Like they're a group of stocks. So the S&P 500 is the top 500 stocks all put together in like one big group for one stock. I'm putting this in like basic terms. That's not really what it is, but it's a group of the 500 top companies in America. NASDAQ is the top, is it 2000, I think, or something like that? The top tech companies in the country. I don't know the exact, I think it's 2000. I'm not positive, but it's the top tech companies in the country. The Dow Jones, that's the top industrial companies in the country. And the Russell 2000 is the top small cap companies, like the top smaller companies. So you want to start off with them and see what's the trend. Is it trending up? Is it trending down? Or is it trending sideways? So that's going to give you a feel for like the day. Are things going up, down, or going up and down, but staying consistent? All right. Next thing you want to do is you want to scout the really good players. So right under the big dogs of ETF, you have sectors, like we talked about with Sector Spider, financials, energy, industrials, consumer staples, real estate, materials. there's how many that is? 10, 1, 2, 3, 4, 8, 10 different sectors, right? So you're checking the big dogs, but under that, like say S&P can be green and tech, all of those can be green hypothetically, but then when you go in there, you can see that utilities is down. So you know when you're looking through the stocks, you might not want to make a call for a utilities company because the whole market, that whole sector, is going down. So it's giving you a feel for what's going on. And like a business aspect, back in the day when I used to work for Target, there's somebody called an LOD, a leader on duty. So believe it or not, when you go in there, and maybe G can relate to this too with his retail experience, there's one person that runs that whole store at a time in like 6 to 7 hour windows. And when you turn that over, so like say KP had the morning, G had the middle of the day, I had the end. When you transition over, you walk through the store. This team is doing that. This team is doing that. Sales are here. Expenses are there. What's going on in the back room, right? So that's kind of what you're doing here. You're getting a pulse for what's going on, so you know what to do when it's time to take action. So first you check out the ETFs, then you check out the sectors. And
real quick, Malc, just on that point, earlier this week was a real world example where I think the whole S&P was down except for tech and healthcare. I think it was Wednesday or Thursday. And so if you had a stock in anything but tech and or healthcare, you would have been down big, most likely. But those two stayed up for most of the day before they turned red. And a good resource to see that in a graph is that Sector Spider website we talked about earlier. Maybe we can show them that at some point, where you basically get a rundown of every sector and how it's performing on that day to help you kind of plan your moves if you're doing any moves that particular day.
Mm-hmm. And then also, I got a note for it later, but keep in mind that this is a fluid process. So like tomorrow morning, whole market probably be red for first hour or two, maybe the day. But then by the end of the day, whole market can be green, you know? Because think about it, like I sold all my goods at the store at Target, hypothetically, but during the day I went to the warehouse and came to restock. So I was red. I got rid of everything, but then I went and bought some more to replenish my stock. So keep in mind, just like the individual stocks, these two also go up and down. TOO, these two. So find stocks according to Sector Spider. And we'll definitely revisit Sector Spider website at some point in the next couple of hours. All right, so what we learned this week, and this is just according to me. I know we didn't all talk about it, but if y'all got some, of course, let's talk about that too. So first thing, take the profits. Take the profits, take the profits, take the profits. KG is adamant every week about saying that money is an emotional game. You know, don't be greedy, know your target. And I'll speak for me, and I know G can relate to this as well. But there were really two stocks that I didn't lose money on, but I lost a lot of profit because I kept trying to make more and more and more and more and more. You feel me? So one was like, instead of making 600, I made 200. It took like 4 days to go up to 600. It took like 3 hours to go back down to 200, you know? And not even 3 hours. It's like 2.5 hours and 30 minutes, boom, you know? So speaking for myself, at least temporarily, I made a goal of 20 to 25%. Once I hit that number, I'm gone. If it run up to 100 as soon as I sell, it is what it is. I just missed it. But if I see it and it's at 20 to 25%, I'm taking it. And a good note that I remember in myself is like, yo, if I had this in the bank, I would have got 0.06% every 365 days. I got 25% in 3 days. That's like 1,000,000 times bigger, you know? So that's something that helps me. G, you want to share?
Yeah, that was something that we talked about a couple of times this week because it kept happening where we would get into something, it would go up fast, and then, you know, we're sitting at like 30% profit trying to see how high it's going to go. And Ray's not on right now, but I've been saying it all week because he said it in the chat. Take the bunt. And what that means is when you're playing baseball, you're not always going to hit the home run. Sometimes you're going to hit a single base hit. Sometimes you might get a double. Sometimes you might have to bunt just to get to first base. But when you get, the objective is to get on base. So to Malc's point, take that 20%, take that 25%. Or if you are feeling a bit more risky or you believe more in the play that you're making, once you hit that 20%, set some more alerts, start to watch it closer, because what you don't want is for something to happen and you lose that entire profit. One example this week was, what was it? Fastly. Fastly was one of the stocks that I had been in for a couple of weeks, and some news came out Friday. It exploded. And I think I went from maybe 2% down up to about 60 or 70% up. But as soon as it hit about 25%, I was setting alerts every 50 or 50 cents to $1 because it was moving so fast. So I wanted to catch that momentum, but I also didn't want to lose by getting greedy. So as you start to hit those profit targets, just start to pay a little more attention to how the stock is moving so you don't end up with nothing.
And I also picked up too, be wary of the stocks breaking the dollar barrier, meaning like once it's at 53.89 hypothetically, once it gets to 54, it's probably going to flirt with 54 for a while before it decides what to do. You feel me? So, and you can tell, like if it's between 54.10 and 54, to me, speaking for me, like that's time to go. Like if it's at my 20% range, you feel me? If it's at like 53.60, you can probably ride it out to 54. I don't know the science behind it, but it seems like every round dollar amount, the stock will flirt with it unless it blasts through.
So the science behind that is you got to think everybody or a lot of people are thinking the same thing. A lot of people are saying, okay, it's at 54.60. I'm out at 55. Well, I'm out at 54.95, so I don't even have to worry about it going up to the next round dollar. So as it hits those milestones, people are taking profits. So as people start taking profits, those prices start to either go lower or, like you said, they keep flirting with that top number, that round number, until something pushes it over. So it's kind of like 50-50 when you start to approach that round number, because you don't know if more people will start to sell than continue to buy.
Sure. Psychology. Number 2 that we picked up this week. Spend time with the charts, and G just already said it, and set alerts. So what I did, and this is definitely the Game 7 mentality, I flew through the course super fast. Every day, 6 in the morning, I got in at least an hour, and every spare piece of change of time I had, I knocked it out. And then as I started paying attention, I was like, yo, like this, some of these things is kind of obvious. Like I may not know when, but I got enough knowledge now to know what. But of course, you need the combination of the two. And I noticed you just gotta find the right chart. And just through my personal trading history, at least now, I ain't really messing with companies that's not huge. Like the S&P 500 is what I'm sticking to for now. That's 500 different options of booming companies. So what I did was I found a website that listed out each company name and each company ticker, like the short version. Like Netflix is NETFLIX, but their ticker is NFLX. And I went through the whole thing and added them to a watch list, which I can show you. And then I would just go through each one and chart it. So most of the moves I made this week, I ain't have to think because I got an alert. Like this stock went under $58 because I checked the chart. I saw that was support. I was like, all right, so if it's going under 58, I'm going to watch it to see if it peaked back up or if it go down. So now my phone just goes off and tells me where to look as opposed to having to actively search each time. Now, I still continue, to look throughout the process, but it's like, it's me looking now and a bunch of old me's too looking together. And that was a very, very tedious process. And I'm probably going to do it again on Benzinga. So I can have news, like Benzinga is like ESPN for stocks. So I can get Adam Schefter level, like super, super quick news on the top 500 companies in the country, and then also get super quick access to the annotated charts already from the top 500 companies. So that's 1,000 little things to do, but you got to do it one time until if and when we switch mediums, right? And that'll mean we eating, because some different mediums it costs more because there's more access, like backed by banks and all of these different kinds of things. But I would challenge you to spend some time with the charts and set alerts. You only got to do it one time. You only have to do it one time. Everything else is icing on the cake. But it's pre-planning so that you can execute. Especially if you got a job and you're not a full-time trader, you're not always going to have time every day to make these kind of moves. Or unless you're like me, who just don't care about your job no more, I'm gonna miss this meeting and do this. Like, it is what it is, right? But you got to be at a certain kind of place in your life to be like that. So it does help you save time later by spending the time now.
Yeah, it's a matter of, my bad, Malc. It's a matter of automating the process. Anybody who manages a team or has a lot of different tasks, the more you can automate, the more efficient you can be. So it's definitely a great call out. A lot of these trading platforms allow you to set alerts, but also notes. I find the notes very useful. So when I get an alert, I can go into that stock, I can open my notes, and it might say, I see a W pattern forming. Once it crosses $60, get in. So now you don't even have to analyze the chart as much because you added that note based on what you were thinking when you were in the whole analyzing, process. So now it's just even quicker. So try to automate as much as you can so that you can alleviate some of that time that it takes to figure out how to make these plays.
True. And there's a guy by the name of Ray Dalio. I think he's the 20th richest person in the world. Lord knows what he really is, because most of that money probably hidden. But I just finished the book, and the whole time he says money is a game and money is a machine. So like G said, by automating it, you're increasing your chances to win the game by having a machine. Now think about it. The Patriots, it was one big machine. Not a conductor is going, but one big machine. The Lakers organization, one big machine. One person out, Kobe gone, LeBron in. Shaq gone, Kobe in. Kareem gone, Magic in. It's a system. Anybody else want to share something they learned this week? Good.
Yeah, one thing I will say is it's almost like what you guys said was like take the profits, like just take small profits. I think before I got kind of lucky with PayPal where it kind of went up some crazy percentage, and then I played what was it, COG, and it's up like some crazy percentage, but being aware that stick within like the 10 to 20%, take that money and then you're good to go. So that was a main thing that I learned for this week.
Take that money.
Yeah, we talked about, I think it's natural to look at that 20% and look at the return, because assuming that we're all starting with smaller portfolios, that 20% might only be $200 or $300 right now. But if you play the long game, continue to take that $300 every single time, that $300 turns into $3,000. And then those 20% returns turn into $3,000, right? Or $10,000. So take those small chips, build them up, and eventually you're going to be in the big league. So we just got to keep driving that home amongst us and then sharing it with the people too.
Yeah, exactly. And I was even looking at some of the contracts with the options where it's like, dang, I wish I had enough money here where I can get maybe 50 contracts instead of getting just one contract for a couple $100 or so. So
we'll get there.
I can see. Yeah. Get there.
And G, you made me think of more or less, I guess it's one of the two, but the baseball analogy, it made me think of Ichiro. Ichiro very, very rarely hit home runs.
Right.
Very rarely. But
he would hit every time down there. Yeah.
He got on base and the only person I ever seen hit pitches that bounced. Like he was finding a way to get on base. He didn't have to hit it that far because somebody else would bring him in. So, and he played for 30 years. He felt like 50 or something when he retired. So that's another good analogy to go with baseball. Or a football analogy, if you can get 3 yards every play, you'll never lose a game. 3 yards.
Exactly. You don't need the Hail Mary every time.
Yep. 3 yards a play. All right, so over the last week, what plays turned out good? And I guess we can show the charts, I guess. But the calls we picked last week, Netflix, Aflac, Progressive, Booking, Expedia, Pfizer, and Moderna, they all went up. So 1, 2, 3, we were 7 for 7. Game 7. 7 for 7. So if you played any of those with money or on paper, you would have came up. Now they weren't green throughout the week, but in the beginning of we called these on Sunday. So if you would have played it Monday, you would have came up. Now let me write this down. Can one of y'all write that down? So when I stop sharing, we can take a look at it.
What were the stocks?
Netflix.
Got you.
Aflac.
Okay.
Progressive.
Okay.
Booking.
Got you.
Expedia.
Okay.
Pfizer.
Okay.
And Moderna.
Moderna?
mRNA.
All right, bet.
All right. And then also these two. Well, no, let's do those and we'll come back.
All right, bet.
Let's do those.
I'm gonna put them in the chat.
All right. So I know first is Netflix. Computer
DraftKings too. KG said DraftKings.
All right, boom, here we go. So Netflix. What was Sunday was the 29th, right? So Monday was the 30th. Right?
Yep, Monday was the 30th.
Yeah. Monday was the 30th. Yeah. So on the 30th, boom. All right, so it opened out red. It opened at 490. But then on the next day, it went all the way up to 509. So that's a $20 spread. Even if you took the 2 red days, you could have got out at worst at 498 from 490. So that's an $8 spread on Netflix. That's a dub right there. Then we got Aflac. KG, you getting ahead of me with DraftKings.
Nah, I just seen it on the screen, so I just made sure I wrote it down so we wouldn't forget.
It's gonna be on the screen. The 30th had a red day. So say you got in at the beginning of the day, which we kind of not really suggest. Like it can be the beginning of the day, but usually you gotta let it breathe first to see what it's doing. I wouldn't just do 931 jump in unless you think you got the ultimate chart, but I would wait a couple of minutes to see what it's doing. So say you got in at 40.
A lot of people sell off in the morning. They take their profits from either pre-market, after hours the previous day, or from Friday over the weekend, and they get rid of it Monday morning. So a lot of the times you'll see that dip for maybe, it might just be 30 minutes from 9:30 to 10 or an hour. But then you'll start to go back up for the rest of the day.
So let's say you either got it from 40, 45 or 44. That's only $1. So 44, 45 up to 46. $2 spread, that ain't much, but it's a dub. Progressive. From the 30th, same principle. From 87 or 88, 2 days later, it went up to just about 91. And then it finished off at 88.26. So depending on how you played it, that's a couple dollars right there. Booking, this was Ray.
Don't forget Affleck either.
I skipped it.
Yeah, you went to Netflix to
All right,
Progressive.
so on booking 2028 or 2055, and it went all the way up. It closed at 2123. So that's
good money right there.
120, 28,
Yeah.
about $100 spread or so in 4 days. Now this one cost a little bit of money,
That
but
was the issue.
you would have made some good money on that too. As Bruce Arians says, no risk it, no biscuit. Affleck. On the 30th, 44 or 45, only up about $1 or two. But once again, you ain't red. A couple dollars in your pocket. What's next? Expedia.
So as you bring that up, I want to just remind or explain how we got to Expedia based on the fact that bookings were so expensive. And this is just how you can think about relationships between stocks. We looked at bookings last week and we said, damn, it's $2,000. That's a little expensive for our taste. So we started to read some articles, and in every article that mentioned bookings, they mentioned Expedia, and Expedia was a lot more affordable. So we started to synchronize those two, and that's a good way to think about things. Sometimes if you have a big company that leads the market and that sector is going up, the other companies in that same sector may go in the same direction typically because they either catch that same momentum or people think the same way we thought. We can't afford bookings, but let's look at Expedia, and you get that same type of uptrend or downtrend.
Mm-hmm. And I think about it like Walmart, aka Jordan. Like if you ain't know now, you go to Walmart, you can get any Jordan ever made. Once he hit that $1 billion mark, he got a new partnership with them, right? But them Jordan 2s, exclusive XYZs or whatever, you may not be able to afford one of them, right? Say you're trying to get it, you a coach for your team. But you can go to the other side of the aisle and get the team Jordans for the whole team. You feel me? It may not be what you want, but get some cheaper ones, get some more, and still serve the purpose that you're looking to serve. Expedia, Pfizer. So I know Devin came up on this probably a lot sooner than he thought, Mr. Long Term. But on the 30th, so that's 38. Yeah, that's essentially 38. So 38, and then 2 days later, it went up to 41. So that's a $3 spread in 2 days. And even if you didn't sell then, it still went up about, what's this? 38, still about $2. Still about $2. So Pfizer was green, and also,
If I could speak on Pfizer, let me know.
go
I would
ahead.
love this. Yeah, I would love. And I'm not sure if we're getting into these again, but I know that everybody has their plays coming this week or things they wanted to share. But I'm actually going to stick with Pfizer, so I wanted to take this opportunity to go ahead and speak on it.
All right, go ahead.
Actually, would I have the capabilities of sharing my screen? I actually got some chart work I would like to share, unless we can do chart work in a different section in the upcoming after you finish going over the reviews, and then I'll go ahead and talk about the chart work then.
And this is a plane you looking to play or still playing?
It's both. I'm still in Pfizer. That's just in particular, I wanted to speak on that.
All right, go ahead. You can share.
Yeah, for sure. All right, I'm going to share screen. Okay. All right. So can you all see my screen right now?
Yeah, can you maximize it? Yeah, there you go.
Yeah. Has it maximized yet?
Yeah, you good.
Excellent. All right. So right now I'm in Pfizer with the option that expires in March. And what that means for those listening is options have dates in which they can expire nullified. Like there won't be any action past a certain date. It's not worth anything anymore. And so you can either take profit, like my gentleman here. And I've been listening and learning so much just on this call. There's I was thinking about this. There's millionaires that sit on different sides of tables, and some have a strategy and some have a different strategy, yet they toasting up at the same table. And so I realized that there's just so many different strategies, and these gentlemen are talking about the 20 to 30% gains. I think that's fundamental. Gotta have it. There's also a big part of my portfolio is holding certain things, as well as long-term, midterm, and short-term things. And so like the scalping and short-term and grabbing those profits, I think is crucial. However, the like for example with Pfizer. So Pfizer went up on news of vaccine pending, okay? However, I look back into Pfizer's history, and so this is going in March when everybody made that large dip, okay? And so they started this trend and hit the rock bottom and went up to this crucial point right here. If you look on the left, can you guys see my mouse moving?
Yeah. Mm-hmm.
All right, cool. Right here's a point. Right here's a point. As you see, it comes up here, breaks that, but comes back down, goes all the way down here, boom, hits that point again, bang, but it stays on this trend now. Okay, and so hits that same line, hits it twice, hits a double tap, comes down, hits this trend line. All right, now it played with it right here, crossed that right there, came back, and it never went below this trend line again. And so all of this is happening on top of good news. And not just news, but factual, like a product. And so it's not just hearsay, it's shipments now. And so it's also a double dosage, which means that if there was a vaccine that just was taken once, that's one thing, but the double dosages, that's literally ×2 in profit, ×2 in materials, everything. So it played around this line and then blasted past this. So I like to combine technical analysis with sociology and psychology. And these are one of my plays that I foresee it going up, and they're the highest percentage of effective rate too with the vaccine. I've been doing a lot of research with them. And so I foresee it going at least up another $5 to $10. There's no reason because with using technical, sociological, and good news of actual product that this would go down. There's no thing to say that. There's no evidence for that. And so I do hold on to this. And so I can foresee it going up maybe $10 really. And so using that option calculator, I realized that my $1.79 contract, which is now like $4.50. So I've already made like over 150% profit. And you would say, bro, you're tripping, right? Like take it at 20, take it at 30. But through analysis, there's scalping and then also midterm and long-term ones. And so if you guys can see my computer here right now, I then look at where I distribute that profit. I don't only keep it in my trading. So I like to spread some profit. So I can see it 1,200 to 1,500 on this. And so I make out a plan of business, crypto, cash, and stocks. I diversify as much as I can in a consistent basis over years. That way those what would you call them, bags you was talking about, like as you can trade at a larger account, I'm making sure that I funnel those abilities to trade in various accounts. And so Bitcoin, Ethereum, altcoins that are maybe 100, little sprinkle method. Businesses, I find businesses and like Xcraft, they got all 5 sharks on board. A drone company that's working with ambulances and police to be first responders, their drones to be the first responders. And other crypto. But yeah, man, I'm looking forward to talking today about stocks. So I'm gonna go ahead and stop talking about Pfizer though. But yeah, I'm gonna stop sharing.
That was good info.
That's good info, bro.
And just for future reference, if and when the time comes, you definitely gonna work with the beginners. I don't know, it's because you got that you work with little kids. You got a very welcoming voice.
Yeah.
Yeah.
You take your time. You take your time. You go through your
bro. There's nothing more that I've learned more in teaching than patience, bro. You can't rush through things. If somebody expects to learn them, can't rush through something. They just don't learn if you rush.
Very true. Very true. And it's also obvious too, and it's probably why you are a teacher. Very organized. Very, very well.
It took years. It took years, B. I was not that organized, I'll tell you that.
I believe it. I believe it. All right. So Pfizer. And
did we go through that whole list?
Now we got one more.
Okay. Let's do you have another section for like misses, or what's after this? Because I want to go over Home Depot, but I don't know if you got it somewhere else, because that was my recommendation last week.
Yeah, this is only what we call. I
called Home Depot last week.
Oh, I went through the banners, but I got what went good that we actually played, and I got what went bad that we actually played.
Okay, that's what I was asking. Okay.
Yeah, it's coming. And Moderna. This had a crazy week. You would have ate. So
crazy.
Maybe not. Yeah, okay. On the 30th, what day is this? Yeah, on the 30th, 144 it opened, 152 it closed. And then when you woke up the next day, it went up $25. Now see how it blew down like quickly.
I think KP mentioned that they sell off.
Yeah, G did.
I think that was G.
Oh, that was G, yeah.
Indicator, you knew it was gonna come back. You see how far above the band it was?
Right.
And that joint had to come back down. And look where it came back down to. It literally stopped on the band. You feel
And
me?
stay with it.
Yeah, so if you was hit to the game, you would have got like, I don't know about Devin. I would have had to take this. You feel me?
Mm-hmm.
I would have had to take that one. And then if I wanted to be long term, hit the band, get back in. You know, so you can still be long term by hit, get out, get in, get out, get in, get out. You don't know, you don't have to just stay there. Like, you can if you want to, but it's not necessarily the only long term option. All right. It's good, Kellz. How you living? Good?
You on mute, Kellz.
Yeah, I've been here the whole time.
I saw the couch. I ain't see you until I looked back down.
Oh yeah, I've been here the whole time. Great.
I think Ray is backstage as well.
Yes, KG. Yeah. What up, Ray? You froze? You?
What's going on? I started to think y'all wasn't trying to let me in the party.
Bro, I got a lot going on.
See what's going on. Good morning. I started to think y'all wasn't letting me in the party.
Man, y'all gotta let me know. I got all these screens up and stuff. All right, so
Yeah, I can hear. I'm good.
All right, so now let's go back to the presentation. All right, so next we're going to go to the plays that we actually played that turned out good. The plays that we actually played that turned out good, which was more or less all of them, most of them.
Right.
So we got, should just put these together. DraftKings, which I played over a span of 12 days. And I also know G played it more or less the same, I think. So we'll make sure we check that out. Pizzle, can you put them in the chat? DraftKings and
I got
what is it? Citrus, I think this company called.
Citrix.
Citrix, okay. Played that over a span of 3 days. I don't know if you played that one too, G.
Yeah, I did.
Then we also got Intel. That was over a span of 1 day, 24 hours more or less. Then Skyworks or something like that.
Mm-hmm. Yeah, Skyworks.
Okay, that was over a span of 2 days, and that was one where really had to be patient. We'll show the chart, but it flirted with whatever round number that was, and then boom, the next day it flew up. Got up out of it. Next, we have City. That one's still in play. Just played that one on Friday. Still determined. What else you want to add? Anybody else? I know, G, you probably have some different ones.
Yeah, add Fastly. That's FSLY. Put that in the chat for me, KP, please. That was the big one this week. So we can go over.
Got you. Thanks,
That's it. Yeah. And that's actually one that we talked about maybe our first time going live, because I've been watching Fastly for at least a month, if not longer. So that's a good chart to look at short term and long term.
Okay. All right. Anybody else?
In terms of what?
Plays that you played that turned out good this week. No?
Yeah, I didn't play anything this week.
Okay.
Besides Pfizer, no.
Yeah. Oh, yeah. And Pfizer. And we already checked that one. I mean, but let's look at Pfizer again. What's that? PFZ?
PFE.
PFE. And Ray, we took a look at bookings. I don't know if you looked at it since you called it out last week, but it went up about, what, $120, $130?
Yeah, in like a day.
Yeah,
I looked at it. Well, I still have it on my Weeble. I've been looking at it charting. Of course, I haven't played it, but I still been charting it.
Okay, that was a good call.
Ray liked them expensive, John, boy. All right, so first we got DraftKings. That's 12 days, so that was the 18th to the 30th. So on the 18th, right here, about 47. Then got out on a perfect day too. On the 30th, up to 53. Roll that up. Had to be patient here with the red. But like Devin said with Pfizer, if you understand what's going on with the company and the social context of it, it allows you to be a little bit more patient or a little bit more quick. And I remember on the call, I had highlighted that I knew the NBA was coming, and Lord knows what that was going to bring to DraftKings. And on the 30th, they signed a deal with the Pistons to be their official betting company or something, and that's when the stock flew up. So DraftKings 18th to the 30th. Then we got Fastly.
So I'll talk through this one. Pull it out some more. That's good. So way back when, I think that was in the middle. That's good, Malc. Maybe the middle of October towards the beginning of December, you could see that big gap down. So I think it peaked. It's hard for me to see the numbers, but it peaked somewhere around 136. And then one day, for whatever reason, it gapped all the way down to like 80 something, maybe the low 90s. So my play this entire time as this was developing, the first time I played it, I think I got in around 70, was for it to hit that 90 area and then gap back up at some point. So I think I caught it at somewhere in the 70s. My break even on my first call was like 82 or something. So I won that back in November, and I got out. And then recently I watched it, and I told myself as it was approaching that 90 mark again, that it was probably going to get ready to gap up. So earlier this week I got in it, and you can see that last candle on Friday. Fastly, someone somewhere leaked that Fastly had been talking to Cisco, I think, about being bought out, and that shot it up for one day. It went from like 80 something all the way up to 95 or something, I think. And we talked about this in the chat, and this may be a little too advanced for like some of our viewers just getting started, but this was the first time I took some of the principles that we use on the daily chart, so the Bollinger Bands specifically, and I kind of transposed those to the hourly and the minute charts. So I went to the 30-minute chart actually on Friday, and I was able to look at the bands to ride it up. You can see where it exploded and where it's riding up with the price. And as soon as it started to come down, which was right around like $94, I got out. And lo and behold, it dropped right back down to almost where it started for the day. And now I still think it regroups and it still goes up and fills that gap at some point. But to your point earlier, Malc, you take that profit at a high point, I let it come down, and now I got even more money to work with to catch it back going up. So it's kind of like a wash, rinse, repeat type of situation. But it was a good play for me just in a couple of days because of those keys that I watched.
That was a great play.
Yeah.
Right, and just to revisit our tips for beginners, I meant to say it when Devin showed his chart, but think about it. Before this, all this stuff that you just talked about, say you only had up to here, right? Put it on the line chart. You got all your supports and resistances lined up, right? Zoom all the way out. And you can do this down here. It don't hurt because Lord knows when another pandemic or the people behind the scenes make something happen in society, you never know. But if you go back here to this last recent time, this line is already set. It got down directly to, like, it literally touching this line. That line would have already been there. This line is here. Now, I played around in some space right here, but that can be a new line that you draw for the future. And then once it came back over, he's like, all right, I'm back in business. And you know to ride it out to the line that you already had. And that's literally where it stopped. You know, so the stocks don't do nothing but repeat in their own little unique way. But the peaks and valleys are always the same until they're not. And you know, until they're not point, that's where you got to be patient. And once again, it stopped right at around $1. 129 is where it closed. Here, it hit a peak, 97.16, just about 15 cents over 97. So once again, be wary of the round dollars. And G, you didn't even play this until Friday, right?
Yeah, I think I was watching it, or I had an alert set for that, whatever that number is. It's like 80. I want to confirm what it is. It's about 84 or something, where it peaked at the gap, at the beginning of the V. So I'm still looking to the left, all the way to the left when it first gapped down. I was waiting for it to touch that. Yeah, I was waiting for it to touch that top of the second candle, right there. Yep. So it hit that, or it was getting close. So I started watching it, and then when it hit, I jumped in because I knew with that momentum, it was going to go up. So it just so happens that it started to move before the news came out about the potential buyout. So obviously the people with the money got that news before everybody else, and they started to make it move. So I jumped in, and then that news came out, and the momentum went crazy for the day, and it went up like $15 in a day or something.
So that's Fastly, this joint, Citrix. I can't remember the days, but I had the trend line set, and maybe I saw it walking up the bands and the trend line. Oh, and I saw this. I saw the moving average. We talked about this a couple of weeks ago. The 10-day crossed the 20. And I probably should still be playing this joint. I might get back in if the 20 crosses the 50, because it could still go up to 133. So depending on how long that takes. But once again, just using the indicators, made a couple $100 on the jump. But I just following the trend of the line using the indicators. Intel. But yeah, these came from just scanning the stocks actually and setting alerts. Same principle. Trend going up. I'm assuming it's on the bands. Yep, it's even above the bands now. So I would be wary for a fall back down to here, maybe tomorrow, sometime soon. That jump coming. But it's walking the bands and it's walking the trend lines. And I'm sure the news matched up. Same thing with the moving averages. It crossed the 20 and it just crossed the 50. So this joint might go up to 50, really 56, you know? And I got these other lines for points of mini resistance for like the big dog. But the indicators line up, got in there and made the play. Skyworks. Once again, I think I just found this. Scanning stocks. Yeah, so I remember this one. It was definitely the chart. So I think I got in. I had this over here. I had it on the line chart. I saw that when it hits this 143.57, it might go through or it might not. Right? So that's how I got this resistance, this yellow line right here. I looked at the previous history. And then I set an alert for when it breaks this point. So I got in, I think on Tuesday, because it broke. I had an alert set right here. And when they broke it, I said, all right, I can get in. And I know just to watch it. I can play around with a few dollars. I'll take $100 loss if I have to. But I played with it a couple of days and it kept going back and forth and back and forth. And then boom, this day, and I let it go right at 150. And it stopped at 150.18. I was taking a walk. I wasn't even looking at the stocks. My phone went off. It broke it. Got up out of there. So it flirted with that point right there. Then it flew up on like Wednesday, I think. So once again, just using the tools. And this line that I used was previously made. Once again, the stocks only repeat itself. Just like over here, it hit it, came back down. Touched on it, flew up. So they only repeat. Then City. This was another uptrend. Yep. Another uptrend. And I got in at the bottom of an uptrend and just rolled it up the line. And if you use the bands, it fell off the bands, but I noticed that it got caught by the trend line. So I thought it should be all right. So I played the bands, and also the moving averages look pretty good. It wasn't a recent cross, but I really just played it to get in and get out. But that joint is doing all right. And
do you ever follow the 60? Like I know, like the moving averages, I always look at the 10 and the 20. Do you ever really use the 60 like that as like a reference?
I use the 50. 10, 50, I use the gotcha. 10, 20, and 50 exponential moving averages, which are gotcha. These. And then I use the 200 regular moving average. See, look right here. When it crossed the 200, so this jump going up. So if I would have caught it before, I would have gotten it right here with all the lines crossing. Just like in math in school, if you paid attention, wherever lines cross, that means something.
Something, right.
That's usually the answer to the problem, wherever the lines cross.
Yeah.
Right? The 200 moving average, 10, 20, and 50 exponential.
And sorry to keep butting in, but explain the difference between the exponential moving average and the moving average. I mean, which one would be key to use in different situations? Because I never really used the exponential one, so I just want to find out.
Well, the exponential is like far more frequent data. It's more frequent data. Like I don't know how to say it. Like you're getting an email every hour as opposed to a recap of the day at the end of the day.
Got you.
You know what I mean? That's my basic understanding of it.
Yep.
But I just remember that from the courses, so I just applied it. But he said the exponential was far more efficient than the
moving average. Okay.
I think the exponential. Somebody's echoing. All right. The exponential weighs the most recent data heavier than the older data, right? So like what happened this week is more important than what happened. If you're looking at the 50-day, what happened this week is weighted heavier than what happened 47 days ago.
Okay.
I think.
Gotcha.
Like, and doesn't it skip like earnings and like weird gaps and stuff? I think too.
I'm not sure. I'll Google it and come back with that.
All right. Yeah, I feel like he said something about that, but I know he said to use EMA those three and use MA for the 200.
Gotcha.
Good question. And all of the ones I played where they crossed, they went exactly where the indications said they was going to go. And just to revisit Devin, now my chart look a little different. I ain't chart this one all the way out, but even with just what I do have, like it fit. Like I had a line. I don't know where it came from. See, probably from here. This is probably where I got this support right here, and resist in the gap right here, and resistance here. That's how I got these two yellow lines. And if you look at the recent time, if you would have been paying attention to the stop, you could have got in at the bottom, rolled that joint all the way up to the top, from 35.60 to 42. And once again, look where it peaked at, 41.99. It didn't hit that round number. So when you know those round numbers are coming, you got to be wary of an uptrend or a downtrend quick. Like they hit 41.99 and said, nah, going back down. Over here, 41.42. Okay, that's not really a round number, but that 41.99, you saw that round number coming, you would have got up out of there. But once again, they don't do nothing but repeat. Any plays we missed? No? All right, so now we're going to go to the ones that turned out no good.
So real quick, I just Googled it. I put it in the chat too. It says the exponential moving average gives a higher weighting to recent prices. The simple moving average assigns an equal weighting to all values.
Okay.
Yeah.
There you go. All right, so like is a team hot? You feel me? Are they 10-6 because they lost the first 6 games and won the last 10? Or did they win the first 10 games and lost the last 6?
That's
Same
perfect.
record, different stories. So those are the ones that went good. So what about the ones that turned out bad? And for us, an L is a lesson. It's not a loss. An L is a lesson. And speaking for myself, 2 of the ones that turned out bad for me, number 1 was Apple. On the 30th, I got in. On the 30th, I got out. Panic sold. But at the end, I missed a big run. I missed a couple hundred, if not a G or so. That same day, for real, it finished off green. And we'll pull Apple up. And it was also the same concept the first time I played City. I saw the dumping going on. It was red. Got up out of there. At the end of the day, it was green. And as we saw, it's been on an uptrend that whole time. So, like as Devin said, you got to be patient. Understanding, like when we do an option, you do it for 30 days or so, like, and in an hour you already out. You feel me? So unless you get big, wild, and crazy, be willing to stick it out. And then currently, a play we're playing, it's only been less than a day, but it's red, is AWK. I can't remember what that is, but I do remember that the chart lined up perfectly. So we got Apple. We already saw City, Apple, and AWK. Anybody got anything they want to add to that list?
I'm tentatively.
AWK is American.
Go ahead, Kellz.
AWK is American Water.
American Water. Okay. Thank you.
I was saying I had called out Home Depot as my pick. I'll go through the chart and show y'all why technically it was a win and currently it's a loss depending on how you played it. And it goes back to taking your profits versus having a long-term outlook. So I'll walk through that after you go through yours.
All right. So we'll do Apple, American Water, then we'll do Home Depot. All right, so Apple. This was actually, I think Devin did this one on the call a couple of weeks ago. I can't remember, or maybe it was in the chat. He talked about the triangle, right? So I've been watching this one the whole time, and as soon as it broke the triangle on the 30th, I got out of there. But the thing was, in the morning, it was all red. And I know G was in the chat messing around like, it's tech about to go red, tech about to go red. And then it did go red, and the stock started. So I got up out of there. Then I looked at the end of the day, it had went all the way up here. And then 2 days later, it went all the way up here. Third day, it went up some more. So I left all of this on the table because I didn't get the stock some time to breathe. It didn't trust my weeks of work and patience waiting for this moment. Then I got jammed up. You feel me? Because I was down in the first quarter, forgetting that it's a 4-quarter game, and pulled Devontae Davis. You feel me? I ain't come back out to finish the game. So that's Apple. So once again, trust the charts. Trust the charts. And then
I'd like to say one thing before you leave on this, just for knowledge of trading triangles. So there's a couple of things that can happen when you trade triangles. So as it goes, like there's triangles where the top stay horizontal and then the bottom is going up. That's an ascending triangle. Then there's times where they both kind of like on that 45, you know what I'm saying? And two things can happen. It can pop out of one side of the triangle and then retest the triangle, you know what I'm saying? And then in that time, it can go back into the triangle or it can bounce off. So if it pops out, a lot of people like to scalp that initial growth coming out of that triangle, as you can see. Like a lot of people would have took out once it started to curve or whatever. But it can also come back and retest the triangle. And if it bounces off of that triangle, more than likely it's about to shoot off. If it goes back into that triangle, that's where people would have to start trading it again and looking at their graph, see if it comes off of the bottom of the triangle. So just be aware that it's not like 100%, y'all. Like if it pops out of a triangle, it's definitely going that way. It does test that triangle sometimes, and sometimes it shoots straight out or shoot straight to the bottom, either or.
So, Dev, I have a question for you real quick with the triangles. Me and Malc were talking about this throughout the week. And Malc, you kind of helped me have a better understanding of, when it breaks above it, that means it's going up. And when it goes down, that means like, chill out. But would you say that it's safe to redraw? Like, when is it safe to redraw the triangle, right? Like, let's say you have this triangle right here, but then like 2 or 3 days, from now, it's been crazy. Do you redraw your triangle every single time to look at it to kind of gauge where it's at? Or do you kind of...
That's a good question. And I would actually... All right, so I would have the triangle drawn, right? And as the graph and days go by, does your graph stay Are your lines capable of staying, you know what I'm saying, overnight, and they'll be back where they were? All right, cool. And so
Yep.
as it pops out, I wouldn't change the line because that's the line that it'll retest. You know what I'm saying? Like if you start like readjusting it, that might be like, you know what I'm saying?
Yeah.
Like honestly, Malc, if I see where you could kind of like have two different triangles, you know what I'm saying?
But you could have one from starting up at that 120. Was that 137, 127 or something?
Looks like like honestly, that 128 realm on the 24th of October. No, before September is August. Look at the August 24th range. Do you see it?
A little to the left, all the way to the top.
Yeah, now go up. Now you see that range right there?
So
it's like it's sometimes price just moves out of the triangle or whatever. But anyway, bro, I could talk about this for days. But to answer your question, KP, I would make sure that my chart work is solidified and allow price to move within it. You know what I'm saying? Don't be moving the lines. You can add some.
Right. That's a great point, because if you readjust the triangle, then how will you know where's a good standing point for your lines to keep retouching and going?
Right.
Yeah, I feel
right. That's why the initial chart is crucial.
Gotcha.
Yeah.
That explains it fully right there.
But now here, I'm not even really looking at the triangle, at least not immediately. I'm looking at this support right here. Because if you look at this red candle, it tested it and then went down. Same principle over here. It got jammed up right there before. So I got an alert set for this support to see it down. And then the next thing will be the triangle focus. Then the next thing will be this support. Or if it go up, right? And a lot of people would think, all right, I got a 120 to 132 support and resistance. But for real, I'm gonna make this jump die. But I know it's got to get through this 126 first to get to this 132. So I'm gonna look to play it to this 125 actually first and be ready to get in or get out right there. And if it hits and go down, I'm out. I'll play the same thing again. And then even if I want to play it safe, when it does hit 125, let it go up $1 or so, and I'll ride it to 132. Like G said a couple of weeks ago, once you trade one stock a couple of times, you can just trade it over and over and over and over and over and over again. You combine how it operates with the news. You combine how it operates with the product releases and all of the other information that you pick up, and just keep riding the wave. Like for real, boom, you could have rode it from here to here, rode it from here to here, rode it from here to here. And then now the triangle up a little bit, you let it reshape the pattern. Then continue to just ride it out through time. Especially with like the Apples and the Teslas and the Microsofts and the Amazons and all of the companies that's going to do good no matter what. Their stocks more or less is going to do good no matter what too. And especially if anything do go wrong, those are companies that's going to get the bailouts. You feel me? So even if it crashes, it's coming right back up. So you can keep messing with the same stock over and over. So American, and then G, I'll give you the screen to do Home Depot. So this one, I remember this one. I had just told everybody, I said, I ain't making no more trades till Monday. I'm going to just get ready. Then I was on Benzinga and saw the alert. I said, let me check this joint out. And everything lined up. So I saw.
It's the wrong chart, Malc. You did SWK.
I was about to say, it ain't looking like I thought it was.
Yeah, I'm looking at like, wait, where's the
Yeah. I'm like, that's a nice uptrend though.
But yeah, like you said, even this one, it's a nice uptrend, right? But I saw that it broke three things in one day. It broke the support at 152. It broke the triangle support at 150, 130 or so. And it broke this mini support at 148. I was like, all right, something ain't right. So I saw it was trending. So since it's trending, I can use the moving averages as an indicator. So that's what me, G, and Pizzle just talked about. I went to that John, and I saw, if you can see, the yellow is the 10. The 10 broke the 20, and it's coming for the 50 quick. So I was like, all right, it broke 3 supports. It's coming for the 50 on the indicators. It's got the bands. It just now touched the downward band on the Bollinger Band, and they're both kind of going in outward directions. So that's another good sign. I checked the KDJ, which we don't talk about too much, but that's a predictor. That's taking a sharp turn down. So that means that the stock is going to follow it down. You don't really know when, but that's an indicator that the stock is going down. And I also checked the MACD. That joint is plummeting. So everything says that this is going to be down for some kind of change. And I ain't checked since a day ago, but it says, why is it down 3.6% since earnings? Let's see what it says. Oh, and
somebody out here looking for a put.
That's what we got.
This is what we got.
And it recently came off a 52-week high too, 30 days ago.
Yeah, it's definitely going down.
Estimates have been trending downward for the stock, and the magnitude of this revision indicates a downward shift. Notably, American Water has a Zacks rank number 3 hold. That's Devin. Keep the stock for a long time. We expect an inline return for the stock in the next few months. So I ain't read the whole thing, but a quick scan says it just came off a hot run. They still think it's going to be hot in the long run, but the next few months can be rocky. So that's another good sign with a quick scan. Right? You don't see nothing being delisted, that kind of fall, but it does say for a couple of months you can expect that stock to go down. And then also don't put too much faith into the news, right? That's just guidance for you to do your own research to see what you think.
I use it to find trends. Like I'll never take one report as gospel, but if I read 4 or 5 and they're saying similar things, then at least that's a trend. And you can build on that and you figure out if your data supports it or rejects it.
AWK. I don't know what they're saying. But yeah, y'all get the point. So we got an article and we got 4 or 5 indicators that all read that it's going down. So I didn't hit my number yet to break even, but I literally just got in. I waited. I didn't get in at the beginning of the day, right? I waited to cross all of those supports to get the sign. So I know for now I'm gonna at least ride it to 143, more or less, and I'm gonna pay attention. And I got it as a mini resistance because I saw over here it touched this joint like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17 times the stock took a pause right here. You know, so I got that set as a mini support. But remember, this is a put. So we want this joint to go down. So just because the stock market is bad, that don't mean you can't make bread. Only an uneducated person, stock-wise, would believe that. So that's the play, one of the plays for the week. And stop sharing so G can show Home Depot.
Home Depot, right? That's what y'all see? Yeah. So Home Depot, I think last week I called it out. I had already gotten in. This is, let me start from the beginning. So basically, if I pull out on this chart, you can see that the trend is positive, and you can see right now the stock is actually at what I identify as the lowest support and is about to touch the trend line. So long term, I think that Home Depot is in a good position. A lot of the news around it is very, very positive. One of the Morgan Stanley actually just raised the price target to 320, and we're sitting at 263. So that tells me long term, it's probably a really good stock to watch. I think what we're looking for is for this to either bounce off of the support, which is like a couple of cents away from, or if it drops below that, we want to see it hit that trend line and turn back up. So the orange is the trend. This blue line is the support. Where I said it was a win and a loss last week because I got in on November 27th. On November 27th, I thought that I had a higher support somewhere, and I thought that it was at that support and that it would turn. I didn't wait for the turn, which is my issue all the time, not being patient enough. So it actually broke through that. But even if you would have got in on the 27th, by Monday, which was the day after we recommended it last week, you would have been up 20%. So if you would have got in Monday morning, you could have been up at least 10 to 15% if you followed that take the base hit, take the bunt mentality. If you held, you would have been in for a long ride downward, which is where I am right now because I still believe that it's going to turn. So learning is definitely wait for the turn as it goes to your resistance. If you're looking, to your support, if you're looking for a call, or conversely, if you're looking for a put, wait till it hits your resistance and turns before you jump in. But going forward, I think you still have the opportunity to play this if you remain patient and wait for it to turn here at support or this trend line, this orange line. Let me switch over to the candle chart. You can see a lot of red days in a row. I got the RSI up here, which shows you how oversold or overbought any particular stock is. It's completely oversold, which doesn't line up with all of the news and all of the positivity around the stock. So I think one of the key catalysts for the sell-off was this dividend, which was paid out on 12/2. And I noticed that earlier this week that after the dividend, it fell off. So I took a look back and I saw after every dividend date, you get this sell-off. Go back one more. Y'all can see the dividend is this yellow D. So you have earnings, E. You also have dividends, D, for stocks that pay out dividends. Even here, you had a couple of days where it went up, but then you had a sell-off after dividend date.
Hey,
But
G,
also,
what is a dividend? What is a dividend?
So a dividend is when a company says, as a stockholder, as a shareholder, as we make profits on a regular basis, I think generally quarterly, we're going to pay you as an owner of the company. So there are some strategies out there where people only purchase dividend stocks so that they can get that return. And I see some people say, like, I make $1,000 a year just off dividends, which may not sound like a lot of money, but you got to imagine you're literally not doing anything. You're just banking on the success of a company, and in addition to the profits you make from the stock, you get extra money that's paid out on a quarterly or maybe sometimes annual. I don't know, but at least a quarterly basis, you're getting money in your pocket. So when you buy options, you don't get that dividend because technically you don't own the stock, but it's still something to watch. And if you ever decide that you want to have a stock portfolio in addition to your options portfolio, you can, again, build your portfolio around dividend stocks. But that dividend note about the sell-off, this is from September. You can see dividend hit, big sell-off. But then what happened? Couple days sell-off, it went right back. So you put all that together, you got the sell-off after the dividend date, you got this trend line and support. Dev, you tell me, it's looking like it's going into an ascending triangle here with this first level resistance right here. I think if you can get an option far enough out, you can probably go up to this top resistance, which is set at 286 or somewhere in between. So you got from 263, 264 basically, all the way up to 285 to play with. That's what, $20 that you can get in on a call. But I would say the key is to wait for a turn. And then I think you see it ride back up to either first level resistance, which is 276. So that's about $13, or you go all the way up to 286, which is, like I said, about $20 or so. So it's some opportunity there. So I call that a loss if you held and sold here. But if you either got up when you got up about 15%, or if you holding longer term, this could still be a W for you. It's just about your perspective.
Gee, are you trying with the candlesticks on?
So I set my resistances with the line chart.
All right,
My support and resistance with the line chart.
Okay.
And then when you switch, it's a little different when you switch to the candlestick. But with this, it's enough window there to be off by a couple of cents and still make a lot of money. But
I was curious, what's your bottom, what's your support?
right here is 263.65 or something like that. 263.65.
See, mine at almost 266. Well, you updated it with the last drop?
Yeah.
Okay, I still have that as the breakthrough. I got you.
Yeah, so I had that line, and then when it broke through, I probably should have left it, but I tried to find that next level. What I didn't have before was this trend line. I put this trend line on this morning, which further supported the fact that I think it's going to turn and take a run. But yeah, right now I got that final level of support at 263.65 or something like that. If it breaks through there, then it's time to get out, because who knows where it's going down to. But I think between tomorrow and Tuesday, it's going to turn back up and go for a nice little run.
Okay. And I put you done? Are you still going?
Yeah, I'm good.
I want to show some on Home Depot too. Yeah, take the screen off. So what date did you say you got in?
The 27th, I think. 11/27.
All right. So I remember I didn't get in that day because I saw this first. I was waiting for it to get over 279.
Mm-hmm.
I knew I was patient because it can go up to 288. Then of course, boom, that's when you got hit with that turn. But now it's down here. So I got an alert set at 270 because I see it got jammed up here for 4 or 5 days right here. And it flirted with it a couple times back here. So just like thinking you can get a lot of time and ride the 265 to 288 wave, or think about it in chunks. I got the 265 to 270. Let me see what's going on. I'm going to get in, get out, and then get back in, or I'm going to let it ride through. Same principle to 270 to 279. Same principle from 79 to 88. So you can go long term and have a $23 gap, more or less, $25 gap, or you can go short-term chunks over the long term and kind of play off the little gaps as well. So once again, it's perspectives, but that's something that I noticed. And then also too, this channel is a little weird, but this is essentially the third touch. So I'm assuming this one going to break through this 288, probably break through this 292. So I think this one can be a big win for whoever plays it with enough time. And then it's Home Depot. Like over the long run, Home Depot was killing during the coronavirus. Like people home building stuff. Kellz having a field day. We move. I've been in Home Depot recently more than ever. I know G pulled up the other day.
Yesterday. It's a good luck.
But then we got Christmas coming. We got Valentine's Day coming. People got to prepare for their New Year's parties, probably more than ever this year, because you can't go to the club unless you're in Atlanta or Florida, where they doing what they do. But pretty much anywhere else, you can't really go out. So that's more and more things you got to get for home. And then after that, more or less, it's spring. So it's a lot of good things lining up for Home Depot. So I think that's a definite. That's a definite.
Just wait for the turn. Wait for the turn.
So now we on to what do we see for the upcoming week? What do we see for the upcoming week? Who got something? Nobody?
I spoke about
I got some. I got some already set up.
Go ahead.
You want to share it or you want me to share it?
INTC you spoke about earlier, I think it looks good for this week.
And what was you about to say, Ray?
No, I was about to say that Expedia joint that we talked about. I've been looking at that. I don't know if y'all already talked about that joint, but it had a serious gap up. It's been riding.
You're going in and out, right?
Yeah, it looked good.
Ray, put them in the chat and then we can pull them up because you're going in and out.
Expedia.
I got
Intel.
Space. SPCE.
All right. So let's check Expedia first.
Virgin Galactic Holdings. I'm in there long.
All right, so Expedia. Maybe I did. All right. So this one, I wouldn't play this, John. I would play it. I would wait for this to go down because it's essentially at a 52-week high that it just set. Really like the past week.
That's what I was referring to.
A put?
So you doing a put, Ray?
You doing a put, Ray?
We can't hear him.
You on
You
mute?
Nah, my internet keep going in and out. I know it's spotty. That's why I was gonna write it in the chat. But I was gonna say a put. I just don't know what type of time. But definitely a put somewhere because this has got to go back and then maintain. I think. Let me see something. Give me 1 second.
The bands look crazy. Like I've never seen them in that shape before, like an oval.
Yeah,
I think that's going to help determine. Yeah, that's going to help determine.
So I think like
as that squeeze continues,
it's gonna maintain it. Like,
go ahead, Ray. My bad.
Go ahead, Jake. No, I was gonna say it's got to come back down and maintain like 1 to 6 or something like that. So I just don't know when. It's gonna have a turn soon. I just need help predicting when that. You know what I'm saying? When that turn is coming, but I definitely know that turn is coming, and then it's gonna gap down and fill.
Right,
and then
they got a history of gaps.
Let's chart it and see. So zoom on, and these the beginner's tips for whoever's still watching. You're about to go through that process. So we found the stop. Your man's hip you to it. Your mom, dad, whoever. The news hip you to it. You go in, zoom all the way out. So this is 2018 or so. Boom. Clearly it's hitting this point. It ain't messing with that point. I don't like it. Clearly up here, you got another area. You got a peak right here. I mean, not a peak, but a drop right there. And there's so many you can pick. I just try to pick the most egregious ones outside of the Rona. Like I skip the top of the Rona, but I go to the bottom of the Rona. Boom. And they make me mad every time I see it. Killing, bro. All the way down, all the way back up.
I know.
Right?
Yeah, if we only knew about puts.
Bro. You could have even been safe with a short. Could have risked it all.
Right.
Still came on. Right? All right, so boom, I got all my most of my supports and resistances. And I'll probably put this one. And one where there's only one, I've been putting it as a dotted line. All right, so now we got some context. So Ray said, I know it's going to fall, but I'm not quite sure when. So that's when you go to your indicators. So first thing I want to do is I'm going to check my moving average. All right, I got 10 still on top of the 20 and the 30. All right, so that ain't really telling me too much. It's still growing, although the slope is not as steep. All right, but I'm also aware of the gap, and this gap has to be filled down. But the moving average is telling me not yet. But the bands is falling off the top band. It's almost touching the middle, but they squeezing. If you look at the last squeeze right here, boom, it flew up. So I would wait for this squeeze to tell me what's going on, and I would see where the stock is in relation to all the lines in the band and recheck the moving average. And I'm going to check the KDJ. That's still trending up. It's all right, not yet. And I would check the MACD. That's crossed, and it might be coming down soon, but it's still way up. So what I would do, I would set a smart alert for this. I would go to alerts. I'm going to smart, and I want to stop to touch the 20-day moving average below. So that way, when I know I go back to it, it done crossed in a downward direction. All right, or you can put it on your alert list and just check it every day. But I set that alert, and what I just set was for the moving average for this yellow, more or less to cross the blue. That way, I come back. I know that the indicator is telling me it's going down. So it's like I don't know when, but all of the signs are giving me clues that this is coming down. So I set the alert so that I just get a text message more or less telling me like, yo, you remember that stock that Ray and y'all talked about on the 16th, on the 6th? Now it's 12 days later and it's about to do what you thought. So I would just set that alert for a smart alert for the price going below the 20-day moving average. Or you probably can put both for real, the 10 and the 20. So that's what I would do. But I do think that's a good call in the long run.
A good put.
All right, good looking.
That was clutch. That was clutch knowledge right there on the indicators. I mean the alerts that can be set for moving average crossing. I wasn't hip.
No, yo, I was like, yo, I just learned something again.
Yeah, me too.
That little alert right there, just like that's about to save me in so much stuff.
Yeah, and then you don't gotta look at it all the time, bro. Like you can look at it 1-2 times, boom. Oh, and I did it before I took it off, but you can make a watch list of the stocks that you have alerts for. So like if you even want to go look and double check, just go to the watch list. But I'm just doing that with the S&P. So I just comb through the S&P, and probably by the end of this week, each one is gonna have alerts on it. So I'll just be looking to update alerts and let my phone tell me where to go, or my computer. Like I've been in class this week, Mr. Malcolm, why your laptop keep going off? So I can quit this job.
I just found out how to do it on the phone.
You got it?
Yeah, I figured it out.
That's dope.
Which is the screen? Where is it? Alerts, it look just like on the screen? We can't see that. The button on the bottom right?
Yeah, it says more. You gotta go to the little bell and alerts.
So click the more button on the bottom right, and click alerts, and you can set alerts on the phone.
Yep. Price above, price below. Moving up, moving down. Customized notes, volume above, news, schedule price alerts.
Or what you can also do too, right? Like I got this resistance support line at 122.37. You set another one for when the price goes below 123. Boom. So now we got 3 alerts on that job.
Right.
Or if you want to be even more cautious, set another one for under 114. So every time it moves, you get a text message to go check the job. Because you never know. It could be a gap. So you wake up tomorrow and boom, it's past 114. It's time to play today. Because like G said, we're not the only ones seeing this. So somebody might put in a huge order and the joint drop down. So that's a good one. Then we got
they show have history of gaps because
I got one y'all want to look at. I haven't set no alerts or resistance support lines to it, but it's something we can look at. It's a trending stock. CGC. We spoke about it a couple days ago.
C what C?
CGC, Canopy Growth.
CGC. All right, let's try it. Let's already try it. Zoom out on. So what I do for like the ones that just got one peak, I just put the dotted line. And the big ones, I put the solid line. But this is a marijuana company, and it got the good news from the government, the House or whatever. I don't know about the government, but they voted on it. They voted on it and just took one step towards making marijuana legal federally across the country. So that's a good plug for this stock. Let's see what the news says. The MORE Act passes. I guess that's what it is, the MORE Act. It was a historic week for cannabis. The House of Reps voted to pass the MORE Act, a piece of legislation that could effectively decriminalize marijuana on a federal level. The bill now heads towards the Senate, where results remain uncertain. So that's a good news. But then also, I was talking to Kendall and somebody, our new president and vice president. They got a history of incarcerating people. I ain't political, I ain't no left or right, but I pay attention. So I know it's got to get approved some more. So I wouldn't just assume that's an automatic win, because that can get turned down in the future. But that is a good sign that the passing the MORE Act is a good sign for cannabis. So it's clearly trending up. But what I would say on this uptrend, Kellz, it's at the top. So although it's going up, like it may go sideways or come back down. Like here, it went sideways, hit the bottom, then it flew up. Sideways along this support right here. $24.30. So you see how it did this here?
Yeah.
I would probably go up here, draw another super mini draw right there, and set an alert for when it breaks it. Because when it breaks it like here, it may gap up, because it's gonna go up quick. So this is 29.50. It's at 29.05 now. So I may set an alert for when it passes 30 maybe. Because the highest has been 29.52.
Right.
But it may go sideways on this line until it hits this support, then goes up. Ideally, we would want to catch it right here touching this white line.
But it also still has the potential to fail. So we kind of got to watch the news on how the Senate is going to act with it.
True.
That's what I was going to say. I was going to say, Kellz, this is, I know we talk about options, but to me, this is like, if you really believe in marijuana stocks and legalization long term, this is something that you get in on as a stock and probably hold, because at the point that you do get that approval, it's probably going to take off. But we have no way to know how long it's going to take them to approve it. And you don't want to get in the option where you got a 2-month expiration with no idea of how long it's going to take to approve, because you might be right about the direction of the stock. You just aren't sure when it's going to go in that direction.
Or until it makes a new pattern. But I agree with G. Like this, it's clearly uptrending, but it's kind of weird, you know. But let's
any news will kill it. Like if you said it's going to the Senate, if they reject it, you know this is probably crashing at least short term, and then it might go back up. But I would be scared to do an option on it. I would buy some stock though.
And just for context, we keep referring to it. Look down here where the 10-day crossed the 20 and the 50. Boom, that's where the uptrend started. So that's why we check for that indicator to see the cross, or how some of us just learned about setting the alert for the cross. You could have checked this out, not looked again, had the alert, it crossed, boom, double check, I'm in there. And that was on, what's the 10th month? October 8th. So over October, just about 2 months to the day, Lord knows how much money you would have made. This was at 15. It damn near doubled in 2 months. So that's why we look for the crosses. And also, I'm being real intentional. Like, I don't even really want to play nothing in the middle, because I know one of these stocks got some crosses somewhere. And I'm not trying to be greedy, but I'm trying to catch it at a time to where I can get as much bang for my buck. So I'll take my time doing the research so I can catch it at a good time. And let's check the bands on that too. I'm sure it was a squeeze right there. Boom, look at the squeeze. Stupid squeeze, right? But it went down. Even if you played that, like, boom, I'm out as soon as it gets off. And then you could have waited. You see, as soon as it touched the blue line, it gapped up. So you would have to gap up with the bands and the cross, and boom, you in the money. But that's why it's important, like we said, to scan them charts every day. Scan them every day. You feel me? And then people may be mad. You in a relationship, she might be mad at you. But she might have been mad on October 8th. She won't be mad today. You feel me? So you got to be willing to make them sacrifices and put that time in. You know, that's something that, speaking for me personally, that's kind of a tangent, but that's something that I struggle with. Like, all I do is like work and take steps towards where I'm trying to go. And it gives some people a hard time. It gives myself a hard time. But sometimes people don't see what you see now until later, you know? And then they'll forgive you and they'll forgive themselves later. So be willing to go through that process, because we catching up of, speaking for us collectively, about 29 years of miseducation, you know? So we gotta make up for it. Space. I remember I called this out in the chat, but I ain't play it. But then Devin said he was looking at it too. You playing this, Dev? You want to talk about it?
Yeah, I can share my screen.
All right. You got it.
All right, bet.
And I found out about this joint on Benzinga.
All right. Can you guys see my screen?
Hold on, I gotta put it on. There you go.
You guys see me?
Mm-hmm.
Yeah.
Cool. All right, so this company is fairly new. Within like 5 years, they really been doing something. So I do stocks. I do a lot of research, and I always look at the technical. I think about the sociology or whatever, the psychology, because it's people that move the stock prices. You feel me? It's like not just the earnings, not just the financial reports, but the people. And so I play the people. as well as the investors in the company. And so I'm long, for those who don't know, long. Well, I'm holding, and I expect it to go up. However, in particular, I'm thinking about playing an option at this point, and there's a couple reasons why. What did I have right here? So it's 100% buy rating on Robinhood, and that's just one of the things. Like G said earlier, I don't just take one thing and roll with it. But they secured a NASA contract. Okay, so boom, like I said, it's business. So when you got a product or something like that you can hold on to, that contract is something you can hold on to. That they have a vital test flight on December 11th. So for those who don't know, this company has been venturing into space. That's why their ticker is SPCE. They're getting into flights commercially that can go around the planet into space. And they're also, as stated before, got a contract with NASA now. You know what I'm saying? The only other people that NASA fools with that I could think of is SpaceX. And then look at where Elon Musk is at. All right. And so I'm like, okay, I started following dude. And then I looked into the investors in the company. And one dude's name is Chamath. I can't say the name, but he's a social media pioneer type of dude. Like he was an exec at Facebook, and then he only gets into stuff that he really believes in. And when you're looking at billionaires and they really believe in something, who am I with my thousand there but to try to you know what I'm saying, not follow what they're doing, not see. So anyway, that's why I was long a while ago. But recently I'm thinking about getting into an option because of the date. So today is December 7th. No, 6th, I'm sorry. And it's hitting this resistance mark. It's also going to, I think it's going to stay right here because the test flight is in 3 days or in the middle of the week or whatever on the 11th. So I don't see price moving too crazy until the 11th. That is a good thing for me because I can get into an option these days and not have to worry about volatility, at least in my head. And this has been ascending since November of 2019. So a little over a year. And I put this right here to show what great news can do for this company. Like how I think it was G said, and Malcolm said, you can trade one stock for a while, but that comes from looking and seeing how it reacts. And so I graphed this to see this growth. This is crazy growth. This is 500% growth from $6 to 40-some dollars. And then obviously it came back down, but it stopped here. Then it's going back up. Here's this resistance right here. Well, it's really just 3 major points. This right here, this little area where it came down and bounced off of that joint. Right here, bounced off of that joint, and now it's up here now. It's on top of the Bollinger Bands, on top of the moving averages, not even playing with this trending line yet. So I think right here, a lot of people don't like buying that resistance because it's dumb. Buying that resistance is not a good thing unless, like I'm doing, it's associated with like concrete evidence of things. And so basing off of what great news does to this, seeing that it's in an ascending trend line and knowing that they could possibly be working with NASA, I'm holding, but I really think this good news of this flight has a lot of potential of even doubling it. You know what I'm saying? Going from like 20 something to like hitting this top range. And so this is only a 47% growth, whereas in this was 500% growth. And so I'm gonna go into an option right here. This can be a play that we see works out or doesn't work now next week. When I hop on, I don't foresee it going below this trending line unless the test is like a ultimate failure. You know what I'm saying? Like damn near rocket ship explodes and they can't do it no more. Then I can see it going down below this trending line. But I don't see it going down here, so that's my risk. My risk is 30%. But my gain risk, I could see getting about 50% hitting this little range right here. If I get into it in the next couple of days, or probably Monday, I'll let y'all know what price I got in. And then by next week, I'll probably get if the thing is at 11th, I can either get an 18th option and play that great news for a quick scalp, or I will get something in January and let it breathe, let people realize what opportunity this is. And then I might do both. I might get an 18th option, which is like $200 something, I want to say. And then I might get a long-term option, which is in the $300, $400 range. However, I'll also hold the stock. You feel me? So regardless, I'm going to make bread off of whatever happens.
That's a good candidate for a spread, too. I don't know how to do them just yet, but it's definitely a good candidate for a spread.
I'm not familiar with how spreads work.
Basically, at a super basic level, it's like you playing both sides to be safe, but just with the concept that whatever side you do win on, you'll win enough to cover the both sides you have to pay for.
Where you lose, yeah. The only, not the downside, but it's definitely you mitigate your risk, but you also cap your earnings. So the thing with the spread is there's a maximum amount you can make. So let's say they're going to 40, that joint go to 100. If you just had a regular call, you're getting all of that profit. With the spread, because you're technically taking a loss on the back end, it's going to be like a window that you profit, and then once you hit that peak, you won't make any more money.
Yeah, I'm familiar with that, and so it's I'm correlating with the word spread now again.
That's good stuff, though. I mean, I'm definitely interested. You said the 11th is the test flight?
Yeah, the 11th is the test flight. And so, like I said, I like little things like that because I'll just take some profits from a different stock I got and just put it in like pivotal points, like very pivotal news. And I'll risk a certain amount. Like I'm risking $200. That's like, what? 2 bottles in the club. I'm risking it for a NASA contract to be secured. I mean, a flight to get. You know what I'm
$200 for 2 bottles in the club down there?
Come on, man.
Yeah, that ain't gonna get you 1 bottle.
Wow. This gotta be a little rock.
First of all, the bottle is coming in the purse that you with the girl. Nah, but to keep it G with y'all down here in the South, a lot of places are bring your own bottles. So people just be bringing their own bottles in the club.
Yo, I'll never forget. Me and Jess went to we was in North Carolina, I think. And we went to the club and we just walked in. Like it wasn't no pat down. Like
pat down on nothing.
Nothing.
We felt like we was in danger, bro. Like you could just walk
you like you ain't finna check them, bro. You ain't.
But it's another alert I just set when Devin said it. I set an alert for the 11th, like just to check the jump. And I'm gonna set another one for the 10th, just to check it. You go to alert, you go to schedule, put the day in. I don't really get the time. You can't. It's only certain times you can do it. But I put one for the 10th and the 11th. Test flight tomorrow. I'm gonna put on the other one, test flight today.
And Dev, do you suspect that as it approaches the 11th, it's going to run up, like maybe even cross this resistance before?
That's the thing. So that's why that's why I got in Pfizer. I don't know if y'all remember. I think, yeah, we had spoke about it or whatever. But like, and what was the other thing I got in early? Off of something, I forget. But anyway, it's like that number. How could I put this? Like I said, I'm willing to risk that a certain amount to get in before it runs up.
Right.
Malcolm is absolutely right. And I learned this from trading Forex. You gotta see what price does. Like money moves a certain way. And the more you watch the charts, the more you can like depict it like the matrix, like the green, you know what I'm saying, joints going down. You can start to read them, you can start to see them. Because this looks foreign to somebody, but we see it like, oh yeah, that's an uptrend with the resistance at 120 something, you know what I'm saying? But I get in before on certain things, and I also wait for price action with certain things too. But this, bruh, can you imagine if SpaceX was public? Do you know how many people would be?
I said that a couple months ago. That would be crazy.
Right, exactly. But they ain't. And who is?
Right. Space.
Who the only ones?
Right here.
Besides NASA.
I just learned this week too. I'm sure G know, but Jeff Bezos got one of them space companies too, working with
Blue Mercury, Blue something.
But they just ended the contract. I just saw that in the news too.
They just created the contract.
No, they left the contract.
It's a completely different company than Amazon. Like we're not associated. It's like SpaceX and Tesla, like two totally different companies.
Gotcha.
Blue Origin, right?
Is leaving to pursue other opportunities. And I wonder, do they guys stop? So they John probably dropping.
I don't think it's public.
And to kind of speak on that, while he's reading that or finding that out, it's like I think, Ray had brought up the puts. Like I make sure to make a list of things that I that social thinking and psychology. What is going down? Not even like just trying to search 500 charts, just really leaning back in your chair and thinking, what's doing horrible because of this? What industries are just probably trash? And that's what it was. I did a trade on movie theaters, and during the beginning of the pandemic, I was like, movie theaters are finna go trash, and it's like tons of movie theater stocks. And so I just made a little bread off of AMC, but they what else do y'all think is going just finna trash? Like it's just
look, this is what you can do. Use your tools. So you go on Benzinga. As it's already on here, you go to movers. We talking about losers. We can look at the last day, right? Set your market cap, set the price for the stock you want. And over here in the filters, I got it so that the price change is, we're only doing losers here, but greater than or less than 10%. So all of these stocks on Friday fell by at least 10%. So that way you don't got to comb through it. You can just go through these. I think that I found the space zone somewhere on here, right? But there's tools like people that's doing this stock game. They're not looking for everything. They got an intentional process to find stuff, looking for stuff.
To filter out the noise.
Huh?
I was saying they have processes to filter out the noise so that they only have the stuff that they need to look at.
Correct. But looking for stuff is totally different than finding stuff. But that's another good resource. Or also on Benzinga, you can set it up so you get all the news for the stock market, well, at least the big news. All right, you can turn this on and the dude talk to you about the big news. And over here, this is called the WIM news, why it's moving. So big movers up or down, it tells you why it's moving, and you can go check that stock out. Like hotels, they're trading higher as the vaccine optimism is coming up. Host hotels, General Electric is trading higher. Real estate, the companies, malls, and so a lot of it has a lot to do. I'm seeing a lot of COVID optimism. Cinemark, the movie theater. I think that's a movie theater or a movie company.
Yeah.
Movie theater.
COVID optimism. Like movie theater is definitely coming back. Like if you got the bread to just sit there, people love entertainment.
I don't know,
fam.
Big piece of news came out this weekend.
Streaming, right?
Warner Brothers is putting all of their movies on HBO Max in 2021, the same day they release in theaters. Mm-hmm. So it might not be next year that movie theaters go away, but the movie theater industry is going to have to change something to survive. Like as of right now, it's looking bad for him.
And only the big ones and the ones with a lot of market cap are going to even be able to withstand that time period of surviving. And so those small market cap movie theaters that are in the stocks, they can't. It's just not going to work. You know what I'm saying? So those are the ones I want to look at.
Somebody will buy them, like, and I don't know when, but in some point they coming back. It may look malls coming back. It'll look different. Maybe it's an amusement park now, or maybe the movie theater is now a gaming center. And by that time, all these young boys, and it's adults too, but the young boys, the gamers, yo, let's go to AMC for my gaming party. Like they're gonna find out something to do with it, because that's too much real estate lost by a whole people with a whole lot of money. So I'm sure it'll be repurposed, and it's gonna take some time, but it'll come back. And what people are dying for now is entertainment. Right? But what I will say, the people who are getting educated now, they're gonna make the money off of the people that's dying to go get entertained. You know? Ain't nothing wrong with taking.
I mean, we should. I said we should unpack G's idea. If Warner Brothers are moving all of their stuff to HBO, we need to start. You know what I'm saying? Who owns HBO? What is associated with the move from moving all of their movies from? You know what I'm saying? From the movie Cinemax to HBO. What's the process? Who's the companies involved with that? Because that's gonna be some money.
Is that a stock, HBO?
It should be.
Yeah, they should. Been around long enough.
Diamond Rock Hospitality Company.
Nah, that's not the same thing.
HBO, owned by Warner Media.
I can imagine they shot up once they made that announcement. Right?
Okay. So you also got to keep in mind, right? Think about it. If Warner owns HBO and they're putting all of their movies on HBO, then essentially, like, if I'm Warner, I don't want movie theaters. I use movie theaters because it's my only means of getting my movies out to the mass public. If I cut out the middleman, then that's more money for me. I don't have to split anything with Lowe's or AMC. So I could see Warner buying out AMC and saying, okay, these are now going to be Warner Brother movie theaters. But I think if I was Warner, I would want to cut out movie theaters altogether if I could. So that's why I think either movie theaters go away, or like you said, they get repurposed in a way where on this block you got your WB movie theater, on this block you got your Sony movie theater.
Well, they're gonna have to do something, because even right now, like, they're not even recording movies because of COVID. So movies take a couple years to actually produce. So if you don't have anything being recorded, you're not gonna have anything 2 or 3 years from now. Like you said, in that digital part, it's gonna be very, very popular.
Right.
Hey, what telecommunications are Warner associated with? Because they're, like I said, that's going to be a lot of internet stuff, a lot of cable. Like, that's going to be a lot of. You said AT&T?
Yeah, it's on the screen.
I mean, that's good.
They're a great dividend stock too.
Yes, sir.
TWX is the Time Warner's ticker, or Warner Media Company's ticker.
Well, I know AT&T owns them, so let's go to TWX. So ain't much news for AT&T. TWX. Yeah, ain't no news since October, so it's probably just too early in the game.
Yeah.
Something to keep your eye on.
But like I said, AT&T is a good stock to get into. Like Dev said, it is a great dividend stock. And if this is trending in the way, then you only gonna make money with the dividends now, and then later on, like for the long people, like you gonna make money because that stock is eventually gonna go up. AT&T is gonna go up if this plays out how G is talking about.
Yeah, I'm long in AT&T stash.
You got some more?
I got one more if y'all. Go ahead, G.
Let me share my screen. Hold on.
Amazon.
Somebody in the chat says CIAA.
That was just. That's where we was at when we went to the club.
Yeah, that's what they was at in the club.
All right.
Hold on. I'm about to pick it. Let's see.
And I wish I could comment, but the two people we was with, that was heaven for them.
All right, go ahead, Malc. I just shared my screen. All right, so this is Gap. So I was just looking through stuff earlier today, and you can see there was this big sell-off right after earnings. So if you read the news, Gap is like, they did some dumb stuff with the election. Like, people didn't like, they put out a shirt that had like one red side, one blue side. So that was just like bad press. They've had a couple of like changes in their executive board. But in general, if you pull back, the trend is clear, right? Like, from this is Corona. Like, basically it's going up. And what stood out to me is right here after this big sell-off where you got the RSI actually isn't too bad. It's down in the 40s. So it's not all the way oversold, but it's low. You got this W forming. So I thought about that. I thought about Christmas, the holiday season in general. And then I thought more long-term, because the stock price is so low. I know Kanye signed a deal with Gap. So I Googled that, and I think he's supposed to release his line in like March or something. So I'm thinking,
21, yeah.
So I'm thinking, all right, boom. That news alone is going to make it run. Even if the clothes aren't good, even if it doesn't sell a lot long term, that release mixed with this low price right now, mixed with the most recent high. Also, if you pull it all the way back, I mean, Gap's been at 29 before Corona. It's been as high as 30 something in the past, let's call it 2 years. I think you got something here. So my suggestion would be a longer term call. If and when it crosses this peak in the W, which is at 2173. So I set an alert this morning around 2170 just to let me know when it's approaching that W. And then once it does that, to me, that's going to signal a stronger uptrend. But again, I'm looking at calls maybe March, April, around a break even to 21, and hoping that you run to 30. I looked at one call this morning. It was a March call with an $18 strike price. It's $480. So that gives you a break even of what, 22.80. I think it can get there before March, and then with that Kanye news, unless something goes wrong, you're probably getting mid to upper 20s. And I mean, it's $400. So that's not the cheapest call, but it's also not breaking the bank. So I'm gonna watch the alerts play out, and I'll probably jump in right around, like I said, that 20, right around 22.
Yeah, easy. Yeah, I like it. Because people, I mean, just look at the voting ballots. People really voted for Ye. So
right,
I can see how it comes out. Yeah, it's gonna be loyal followers who want to vote.
And then
just to speak up, G, so we did something different again. But just to be safe, before you even said it, I set my alert at 2220. Because I see at where is it? This on the 27th, it hit basically $22 on the head. When you said 2170, I just went to that next round number. 20 seconds 20 cents over that round number to double down that it's going up.
Okay.
Just
Now I
keep
like
it.
that. I like that.
And I don't know if you mentioned the gap. I'm not gap to stop, but it gap down. So it has to fill that gap up.
Let me, that might have been the other one. Let me switch the chart. But before I do that, the other thing I was looking at, and Dev, help me out here because I'm still learning. It's a triangle forming, right? This trend up is meeting this resistance at 24. So I'm assuming that upward momentum will create a squeeze, and then you might take off towards the end of that triangle.
I don't see the triangle.
I guess what I'm predicting that triangles will start to be created based on, you see how this upward trend line meets this resistance right here?
Yeah.
So this space right here lends itself to potentially some triangles forming, right?
Gotcha. Okay. Yeah. I would. Okay. I see what you're saying for sure. When you trading triangles, it's gotta be like something has to happen twice on
Okay.
you know what I'm saying, on both things to like, I guess, to verify like how this trend line is verified. You know what I'm saying? That joint is solidified. It's clearly a trend. But the top part, we got to see it hit it again. You know what I'm saying? The name of the triangle. But I get what you're saying. It has the potential to become one. Yeah.
Okay.
Are you going to put on a resistance trend line?
To me, the trend line is the resistance. Like,
I would say that's basically. I mean, I got that as a support, and then I got one on the top.
Support. Yeah. Oh, I can. Hold on.
And I did it from that first big, the next one to the right, the next peak.
Right here?
No, up. I can't see your mouse. It's on. I got it from June 8th, connecting it with November 17th.
All right.
So I got it down one, not that peak, the peak before it. Boom.
Right here?
Yeah. So just as it runs, you know, when they hit that top zone, it might do a little sideways run.
Right. Okay. So then switching to the candle, like you said, Malc, that was the other thing. I think this is what I saw first, that gap down. And then I switched to the line chart and found all that other information. But you're right. My thought is, and I saw this as it's starting to turn a little bit. Like it hit this support on the 2nd, and then the next 2 days were green. So this was me earning on a turn. And then my thought process was, as it goes above what is this, 2160, which is close to the alert, it should start to gap up to at least 2440, and then it continue to run. And hopefully that's just in a couple of days, not all the way out to March. I'm just being safe and saying that if I put it out to March, that gives it more time to benefit from the holiday, to benefit from any news from Kanye or whatever else they got going on. But you could also argue that also gives it more opportunity for bad news to happen. So you got some options here, but I think it's definitely some good indicators that say if you get you a break even around 21, 22, you can make some money, and it's not an $80 stop.
Yeah, and if you look at the January 15th expiration, it's a ton of options to run. I don't got enough free bread for a lot of them, but
I actually wrote one down too. I got January 18 call at 395. So that puts your break even at 21.95. So hypothetically, you get that tomorrow morning, you should break even by Tuesday or Wednesday if everything goes according to plan.
You said January 18th. What's that date?
It's the January expiration. I don't know what the date is, but the strike price is 18.
Oh, okay, got you.
And I
What's the
think
strike price? What's the strike price, G?
Say it again.
What's the strike price?
18.
So you are buying one that's already in the money.
Yeah, we tend to, all of us, just based on our learnings, tend to do in the money calls. I'll look at out the money if I feel strongly about something, but in the money is going to give you your profit the quickest. And if you're trying to get in and get out, I think that's the best strategy.
Yeah, like this, if I didn't have these other 4 contracts, I would have copped this joint at the $12 strike price. It's $9.50. You already in the money, and the delta is 0.98, and it's 800 people playing. Or the one under that 20, you already in the money too, and it's 5,400 people playing with a 0.97 delta. You know, so I don't even look at out the money no more. I'm getting in the joint winning already. Like I paid a couple extra $100 just for that security. I'm already winning. You know.
So yeah, basically you got a lot of options here, for lack of a better term, for January, or if you want to play it longer, you can. Out the money, I will say if I play out the money call, Dev, I'm usually going to play those with longer expirations, because then that gives me more time to close that gap. So you could do like a January call in the money, and then if you believe everything I just said and you think it can run to 26 or higher, get you an out the money call for April or May, which would be after that Kanye release, which you hope makes it jump up to that higher price point.
I got you.
And what we mean by in the money and out the money, more or less, is like, say, who playing today? The Seahawks playing the Cowboys, I think, right? So you betting that the Seahawks win, but you're betting in the first quarter when the Seahawks are already up by 14. You're betting in the money. You feel me? Out the money, hypothetically, is now the Seahawks are down 3-0, and you place the bet. So it's like kind of giving yourself an advantage by playing with the lead, by spending a little bit more to get that extra security. You know? But yeah, I like that one. Put that on the list.
Yeah, I'm looking at this January 15th date.
Oh, well, let's go to we didn't do Sector Spider yet. But let's see if the other charts in whatever industry this is, let's see if it looks similar. Y'all hurting, everybody stretching.
Right, that was funny that KP and Kendall was doing the opposite look.
I mean, yeah, it's going on 3.5 hours, so I had to do a little stretch.
Right.
But 2 hours, I'm tripping.
Central office, that's 2.5 hours.
Man, long day yesterday, man. Long day.
Central office.
GPS. All right, so GPS is in consumer discretionary. And this is a perfect month for them. They're doing all this Christmas shopping. Make sure you got something that's going to pay you back.
All right. Yo, I always thought that.
Bro, I've always been like that. I'm like anti-gift. Like, don't give me a gift. And to be honest, I really don't want to get you one. Right now, the only gifts I'm getting is like something that add value. But until I get wealthy, I don't got money really spending for gifts. And I don't want nobody to give me nothing either. I like always been like that. And that rubs some people.
My first mentality.
Yeah.
He said it rubbed people the wrong way.
Yeah, like, why you don't like gifts? Like, I'm like, no, I just got a plan for my bread. All right, Amazon, Home Depot. Dang, so these gonna. Oh, I know McDonald's. I'm looking at McDonald's. That's a good one. I don't know if I'm cutting nobody.
So as you put that up, one thing I read yesterday, and things just pop out to me as we talk. I read something somewhere. It was just like an opinion, but basically these different sectors. So the sectors we have in the sector spider, like the popularity or the volatility of them rotate. So like for a couple weeks, it might be that tech is hot. Then a couple weeks later, it might be that retail is hot. And I think what I read was that retail is cooling off for at least a week or two. So like retail was kind of down last week, but we know every time something dips, that means it's coming back up. So this might be the good time to get in on retail stocks because the focus might be on healthcare next week, but then it'll eventually cycle back to retail and you'll start to see all those things go up.
Bro,
So yeah, McDonald's was down this week, last week.
this is a move right here. This
You make
definitely-
I was gonna say real quick, you make a good point because one of the things I've gotten into like the habit of doing just naturally is when I go on Sector Spider, I always look for the sectors that aren't like energy. Energy was up by like 1.something%. It's like, yo, it's already kind of at the top. So I always look at ones that are either like in the red or like a very, very minute, like incremental move gain. So that way I know, like, yo, I still have enough time to play this particular stock and bring it to the top. Yep.
But remember, you can play both ways.
Or you can play both ways too.
Because I look at this, John. It was clearly uptrending.
Yep.
But boom, in the past 2 days, it broke support and it broke the trend line support. So all right, let's see if we can prove that it's going down.
Yeah.
So moving averages, it just crossed the 10 and the 20. It back to back. All right, cool. And it broke the two supports. Let me check the bands. Jones super tight, and it's touching the bottom joint. All right, so we like 3 for 3. And I'm going
to something.
KDJ headed down. The MACD headed down.
Where is it though? What is it on? What's the number?
What?
MACD. Like, is it already oversold or is it?
You talking about RSI?
Oh, I'm tripping. Yeah.
Yeah, RSI is at the bottom.
So undersold?
Oversold. That means that something must have happened.
Yeah, I got
panic, and then too many people sold. So to me, that means that it was an overreaction or something because it's McDonald's. Like McDonald's is not going anywhere.
might hop back in that trend line, you think?
Yeah.
But
everything else says the opposite. So I was with it until that. So it's something here. It's definitely an opportunity here.
Yeah.
But I don't even look at the RSI no more. Once Bull said he don't look at it, I ain't look at it. But that is a good piece of information. But it's like 6 for 7 is going down. So and also, let's see, support not really off until 187. So that's a whole $20 down. You might can put this joint as a little mini stop. So you got time to let it breathe to see what it's doing. And it's right at 210.74. So I might put an alert for if it goes below 210 maybe. But it's been on my list. Because this whole time it ain't break this support until now. So who knows?
They bringing the McRib back on Wednesday though, so that might that joint be.
Yo, for real, like people are really. I know some people who really get a McRib every single year. I don't
Serious.
For the record, I don't eat McRib. I know people every year, yo.
I'm not
I
going to
don't eat
get
McDonald's, but I might slide for that.
See, so
Man, y'all stop eating that pork, man.
Don't do it to yourself, bro. Don't do it.
Don't do it.
Anybody else got one? Did I skip anybody?
I think Ray had one.
I'm far, Ray.
Yeah.
You on mute.
I think that's just his internet messing up again.
Hey, here we go. Are you joining?
No, no.
it.
Dang,
That's it.
you okay? You okay, man?
Nah, it is the internet. Overstock.
Overstock.
Open stock.
Overstock.
Overstock.
Overstock. What's the ticker?
Yeah. OSTK. Can I share my screen right quick too?
Mm-hmm.
Yeah.
Kellz, I was about to.
Y'all can see my screen?
No, I gotta put it on. There you go.
All right, so I do need a little bit of help. I feel like it's gonna go down as soon as it touches this trend line. Because as we just been like going over all of these other things, I've been putting in the indicators, how we've been doing on the other thing, like on the other stocks, like how we've been doing here or here. Just go.
Hey Ray, close out the net volume, the KDJ and stuff. I think I gotta expand your chart because it's hard to read when it's so small. You could just hit the X next to net volume on the left. Boom. All right, yeah, that's better. Yeah.
All right. So I'm feeling like it's gonna go down if it hit this trend line right here. Because it goes boom, hits here. But like I said, all of the indicators. Where's my other indicator? I'll be using this one. Basically, I need help discerning whether it's going to bounce up or it's going to bounce down. And stop camera.
Hold on, what happened to it?
Can you see it? I mean,
nah,
that's right here.
There you go. Can you go to a line chart?
Yeah, I'm trying it now too on my computer.
Switch it to a line chart, yeah.
Let me get off the indicators.
I mean, clearly something has to happen.
Yeah, my triangle will look different too, because at
tighter, right?
Yeah, like I would have that support. I would have it going through around September 2nd. So the bottom black line you got, I would bring that to September 2nd. So that first dip it came off of that high. So bring it up some more.
Right.
Keep going. Keep going.
What you talking about, right?
Keep going. Yeah, right there. Boom. Because you see, it was uptrending until then. Then it broke down. Well, kind of sideways. You went up too far now.
Hold on. I was just trying to.
Like right there. Yeah, like right there. Like you see how I broke out that jump? And it's been running it's been running sideways ever since. You feel me?
All right.
So I will have it sideways. And I got it since October 12th. It's been going down.
You share your screen.
Okay.
I'm gonna stop sharing mine. Share yours, Malc.
All right, so
And while you about to pull that up, I just got to make sure I'm on the right stock. Are we talking about a stock that went from the cents, like $0 and some cents, to $100, fam, this year?
from April to August,
Bro,
I see 265 as the low. I don't see zero, but
Yeah.
I mean, yeah.
yeah, 260.
bro, from $2 to $100 in the span of a couple months.
It's Corona, bro.
Whole life change.
That's the craziest John I done seen, fam.
Imagine if you had 10 calls at that point. They probably would have cost $50.
Bro,
Something like maybe a couple hundred.
became a millionaire on accident off of getting an overstock option, and just like for a year or like 6 months ahead, bruh, somebody became a millionaire on accident.
It's crazy.
Bro, that's the most steep thing I've seen, period.
Was you would have kept it or you would have sold it, Mr. Long Term?
Think about it. If somebody would have bought it in April and sold it in April, they would have made nothing. If somebody would have bought it in April and waited for December, they would have made $1 million.
I'm asking you, would you have sold it or you would have kept it?
At this hold on, let me really
I think
I bought it around June or summertime. I would have probably, I have no idea, bro. That I'm still mesmerized by the $1 million game. I can't even think.
I think if you was bold enough to go all the way back to 2018 January and say, okay, it peaked at 85, maybe you hold it from $2.65 up to like 70 or 80. But bro, holding it to 120, that's crazy.
Somebody is a millionaire from
Off overstock.com, bro.
I mean, overstock, bro.
You could have took your profits at 80, capped out, say gap back in and rolled it up a little bit more too.
Bruh.
So, you know what? Let me catch a couple more plays.
If you were smart and you got like 20 or 50 contracts at $2.65, you could have sold half and just said, I'm gonna let the rest ride. And worst case scenario, you still would have made a crazy amount of money.
Mm-hmm.
Shit's crazy, bro.
This is stupid.
But I see.
I'm a little upset right now. I'm a little sick to my stomach.
I see since then, Ray. It's all right. Our life ain't over, bro. We still in it way before a lot of people. So
Thanks.
we got a whole lot of time left, God willing. But since then, Ray, I see it's been downtrending. So I would let it. I'm gonna see if it break this resistance at 63 about, and let it get. You can ride it up to 69, but then also you gotta watch this resistance for the downtrend. So I probably wouldn't play it up until it break 69. But if it hit this resistance and breaks this other resistance, I would ride it down to 51. See what it do at 51. And keep riding it down or get out if it turn up. And of course, I made those lines based on just the history, the ups and downs.
All right. Now I was thinking it was gonna pop down, but
well, let's see what the
just
John said. Because it's trending down. So the EMA, I don't know, it's in a weird little position. It crossed the 20, but it's staying with it. So I don't know yet. And then for the bands, it's right in the middle. It's got a little squeeze. So I would give this a couple days to see what it do. I'll give it a couple of days. But yeah, I wonder what happened. Like, cause this ain't take off until July. July 1st. What is it, like they sell overstock stuff?
Yeah, like when other companies have too much, and maybe something that was for last spring, it goes here and you can buy it for cheaper. So it'd be nice stuff. It'd just be maybe last year's version, and it'll be cheaper.
So it's similar to like a Nordstrom rack, but it's just for like everything.
It's for everything. Yeah, it's the same concept.
Damn.
Okay. That's how I feel like.
And just think about all companies have produced throughout COVID. If the world opens back up, all the stuff that we've been using like throughout COVID time is going to like be sold at a discounted rate, and Overstock is one of those companies that sells leftover items.
But that would support it going up, right?
Yeah, for the long term. That's just like in the long.
Yeah, but if you look at the news, this is from July. I keep seeing 52-week high, 52-week high, 52-week high, 52-week high, 52-week high. That would have told me to look at that joint, and that's in July. Like, something's going on with this joint, and it would have been over here too. So that's just the benefit of checking the news.
Yeah, right. I think your key points is 63 something. Like if it crosses, I'm looking at like 63, basically $63 more or less. If it crosses there, to me that would indicate that it's going up. And then your trend line is somewhere around 55 to 56. So if it breaks through there, then I would look at maybe jumping in.
You mean 65?
Now I'm talking about on the downside. On the downside, 55. I can show you how I'm looking at it.
All right.
Here, let me share my screen. All right, so I got this trend line from that 265 number, running all the way up. Then I got this downtrend from the peak. And if we zoom into where we are right now, it's close to hitting that upward trend or that downward trend, which would be resistance. And that's at like I said, somewhere between like 63 and 64. So if you break through there, then I guess technically, let's see.
That makes another triangle.
Exactly. So that's why, to Ray's point, I think if it bounces off this resistance, then it's probably, or it could break through this support. And then you probably got a little free fall for a little while.
Yeah.
But you just got to see what it does in the next couple of days, right? Right in this little triangle area.
Yeah, but I would say, I don't even know what kind of alerts.
Like I said, I think 63, you could pick where you want to go in this little 63 range. But maybe like 63 and 56. Below 56, above 63 is what I would do.
Okay.
I'll put mine above 70, just for safety. Because after that, it ain't nothing but up. So you can probably
that's true.
Because you always got to be aware of the gap. Like you can just wake up 70 going. Because after 70,
yeah, that motherfucker, it can go all the way to
120.
It can go to 84.
Yeah, I got 84, 103, and 122.
Like it.
all right. Appreciate that, fellas.
They want us to review NIO.
So off the break, NIO, I think I mentioned it last week. NIO was one of the Reddit like meme stocks, just like Palantir. I think I'm saying that right. You just gotta be careful with those because you get a lot of volume based on Reddit, and then those stocks tend to drop a little bit. So I don't know what the chart looks like, but I know NIO went on a crazy run, and now I'll be wary if that run is over and it settles down before going on another one. But let's look at the chart. I'll stop sharing my screen.
Yeah, I'm long on Neo as well.
Yeah, I think long is good. Options is where I don't know, but long term is a good stop.
Yeah, I have reoccurring investments going into Neo, just like Amazon and Tesla.
It's an EV, right?
Yeah, in China.
Dev, I ain't trying to carry you, but you talk like an old man who's been investing for 40 years and made millions of dollars already.
I've been invested for 10 what? I'll say since like 2012, and I've been ups and downs, and now I'm steady.
But I remember when we was little, you was the first person I ever knew who would talk about stocks. I remember that.
I just felt like I didn't understand why people. I didn't understand why people would buy a new iPhone every year but wouldn't buy Apple stock when Apple stock was cheaper. It was like 10% of what an iPhone costs. I was like, then you could have bought 10 iPhone stocks for you know what I'm saying, that one iPhone. And they split, made a heck of bread.
Was it your father who got you into that?
Kind of, man. I don't know about y'all, but like my parents didn't really talk finances with me when I was growing up, even though I kind of wanted to. But I kind of had to learn it on my own for real, and with some partners in them.
Yeah. And this one got 200 million traders. So first thing I see is that clearly it was going up until this past week, and it broke the downtrend. It hit right here where, like, see where I put the little dotted on. It hit right there, went back up, and it came back. So the indicators, the bands is starting to squeeze. It's crossed the blue line. All right, so I'm checking to see if it crossed this dotted line at 42, more or less, to see if it come down to about 39. So the band is giving me a squeeze. It's headed for the bottom. And then the moving average is the 10 is turned down. It's coming for the 20 and the 50. And then I'm checking the KDJ. That's still headed down. MACD headed down. And I don't normally check this, but RSI is somewhere in the middle. It's kind of neutral, headed down to 30. So I wouldn't play it yet, but I would check for it to fall to 30. So I would wait for it to break this 41.73 line. I'll set an alert, a smart alert for the price to go below the 10 and the 20. So I'm gonna keep checking for the cross, and I'll come see what it do.
I think the scary thing with Neo, go back, pull out from the chart, Malc. I think it's a newer stock, so there's not a lot of history.
Yeah, that's like
regarding like a fair price. How far does it go? I might be wrong about that.
I mean, it stayed at the bottom and it took off in July.
But when did it go public?
Oh, the first day, September 12th, 18.
So you only got like 2 years of data, and it's basically it just hit an all-time high. Excuse me, an all-time high. So I would be curious to know where it's going to settle, because it might just have been the Reddit pump and a little bit of good news that got it all the way back up here, but it might settle back down in the 20s.
My fault. Go ahead.
I was just going to say, I would wait to see if this is really a $40 stock, or if in the next couple of weeks it's coming back down to the teens. It's similar to Nikola, where it went all the way up. Nikola went all the way up to 100. Then it played around in the 60s, but ultimately it settled in the $20 to call it $40 range.
Good point.
You know what I mean? So I just would want to know if I'm getting in now, where it's going to settle, as opposed to Dev, if you got in at 11 or 15, you're good because you already made your money.
Yeah, I got in around there, but there's some things, and I kind of like, bro. I done said it about 4 times. I always go to the sheep, like the people and what's going on, and then I back it with something actual and not just news, but like the Chinese government is working with Neo. And so when I saw that and found that out in the research, I was like, okay, this is the biggest population on the planet Earth. And this is a new wave, this electric vehicles. And I'm like, even if 5% of the people there end up going all electric or get this company, I can imagine just off of, you know what I'm saying, the transition in 5 to 10 years. I told you I'll be thinking about my 50-year-old self, dog. I'm just like always planning. I find like options to be like a scalping method, which I always keep a percentage of my portfolio for. But I like just retirement and things of that nature. I'm all about seeds and using the options to put money into the seeds. So I think Neo is a seed. Yeah, that's how I feel about it. But you show right about Nikola. Boy, that junk crashed like, you know what I'm saying, like a drunk driver, dog.
Yeah, so I think our sentiment is we think it's going down, but we don't know yet.
In the short term, long term is probably a good play if you want to get in the stock.
You know how to do a Fibonacci retracement? Is there a Fibonacci retracement on there, Malc? Or whoever's controlling
It's on there. It's on my list to learn.
Yeah, I'll click it. I don't know what it is.
Here, just start like in that support range at the 20, but go like in the beginning of the rise. You know what I'm saying?
So right here.
Yeah, anywhere on the, because that's a important line. You know what I'm saying? So start there.
Just draw straight up.
Click it once, or hold it. Whatever works for the graph. Yeah. Now go all the way up to that top part, to where that max is. All right, and so those different percentages or whatever, those different percentages, you see how it bounced off of that 50% mark, that 38? You know what I'm saying? It hit that joint. So basically Fibonacci retracement is these certain intervals that most money follows when it goes on a trend. You know what I'm saying? And when it goes on a trend, the money always got to come back. You feel me? Got to do that retracement. And so this just measures the different common points of retracement and gives you an idea, is this thing still trending or is this reversing? And so if it hits certain levels and it keeps going, you like, all right, it's still in the trend. Like if you were to move that top part to say, let's go to the $45 point. Go to 45, where it kind of did that first strong retracement. As you see, it retraced to about that. Nah, you was right at first, bro. Go back down. Yeah. As you see, you know what I'm saying, a little bit before where your mouse is, it hit a top and it came back and retraced to that first point, which is a 23%. You see how it closed at that 23%. It dipped, but it closed there, and then it kept on going. If it's at 23% or 38%, it's a strong uptrend. That 50% to 60%, we're not too sure, you know what I'm saying? But it's definitely like a retracement. And you just look at what it does at those levels. So if you pull it back all the way up to the top, we can see what it did at that level. And what it did was go to the 50% and then go up. And it made a new high, not a high, but it hit that 23%. And then it came back down. And we really I'll be leaving this retracement, this Fibonacci retracement on graphs to see how it actually ended up doing, you know what I'm saying? To see what it actually ended up, like how it retraced in. like G and you was saying, like certain stocks just flow a certain way. Certain stocks have certain Fibonacci retracement values. And so people will learn a stock or learn a currency and know, oh yeah, that joint bounce off of 38, or that joint bounce off of 50. Like people be selling like a mug, that joint be coming to 50 for this stock, or you know what I'm saying? So Fibonacci retracement is just that, finding the retracement values.
What does 0% mean next to 55.70?
0% next to 55.70.
Very top, 55.70.
Top line.
0%, the top line.
Oh, yeah. That's just saying, like, yeah, that's just so for example, all the way down is 100%, and all the way at the top is 0%. That's the retracement percentage. That's just a percentage of retracement. So say, for example, look where it says 23%. You see it right now? Mm-hmm. That means it retraced about a quarter of that whole uptrend. You feel me? It retraced 23%. And where that 50% is, that means it, well, now it's moved, yeah. Like that 50% is just halfway retracement. You see what I'm saying or no?
Yeah, I got you. So it's retracing from wherever I take the top to. Exactly.
And that 0% is just at the top. And that 23% is just saying it went down 23% after.
Okay. So this is an indicator of the current price versus where Malc has his point. Because you're saying, let me try to explain this, my question. Mm-hmm. At 55.7, go back to the top, Malc. At 55.70, $55.70, it can't retrace. That's 0% because it can't retrace because that's where the price is. So the price is equal to that line. But you're saying that it has at that point, on that day where his mouse is, it had a 28% or a 23% chance to go back down to 47?
No. It's not the chance of it going down. It's literally the measurement of price movement. And so like, it's like at that 20%, that's a standard for like people selling off. They'll sell off, right? And at around 23%, boom, in a very high uptrending stock, it'll bounce off and continue to make new highs. This Fibonacci retracement is like something done over time and time. And data has created this formula of these standard points, you know what I'm saying, and trending prices and trending stocks. So this is only for trending price movements to see how far it has come down. That way, you know, while you're looking at a stock, okay, this came down only 23% and then went back up on the rise. This is where I want to buy my dip. And so people will be buying the dips at these points. You feel me? Like somebody will buy, you see where that 50% jump, that candle wick went down? Somebody will have a limit buy already set there if they feel like it's in a uptrend. That way they don't have to try to guess it or try to figure out, damn, when should I put in my buy order? They'll put that up to the top, right? Mm-hmm. And if they want to continue to purchase or continue to be long in something, they'll set limit buys at these retracement points. So somebody might set a limit buy at 47. Say they buy 100 stocks and it goes up. They might sell 50 at that max, but they might put a buy order in for another 50 at 47. You know what I'm saying? And they might even have another buy order just waiting at 38 if they feel like it's a uptrending, you know what I'm saying, stock. And so that's all it is a guideline. And when you have it set already, you can see as the days go by where it hits, or you can graph something to see what that stock does. You know what I'm saying? Matter of fact, you can make it way smaller and go back to like the 13th. Like you're gonna have to probably let go of that Malc and then click like the middle of the line to drag the entire item. You know what I'm talking about?
Say it one more time.
So I would let go. If you're holding, I would let go. And then click the middle of like the line. You know how you would click the whole chart and drag it.
So
basically start
on the endpoint.
hit escape or delete or whatever, and then start over.
All right, so
All right. Yeah, make another one and start it. You see all the way to the left of your chart. You don't have, all the way to the left, down.
right here.
Yeah, right. Yeah, down there on the bottom of that support. You see that little tiny amount of start there. Well, at the bottom of that, and then just not even go up that far. Just where I should give you levels. Start the chart at around $11 and whatever is that support of that consolidation right there, and then end it at your first support line at 20. Your first yellow line. Boom. All right. And then you can see, if you just stop it right there, you see how it retraced to that 38%. Do y'all see that? The dotted line?
Yeah.
Yeah. And then as it kept that 38% as the support. You know what I'm saying? And then it never went below that for real. Like it tried to, but that 38% was its support, and that lets buyers know that it's in an uptrend. They're like, oh, on the Fibonacci, it didn't retrace more than 38%. That joint is still rising. And what it do? Keep rising. Now, you can click that endpoint that you have at 20, the little round dot that's at the top, and now move that. I think you might. Yeah, now move that up to the next like max point it went to. And so let's go move it up to like
this one right here.
That next support line that you have set, or even like around there. Boom. It didn't even make it down to the 23%. Oh, look what it hit exactly, bro. Y'all see how it exactly hit that 23%, bro? It's because of years of them calculating. I don't know if you know who the person Fibonacci is, but yeah, it's calculations. So this isn't just like a guess thing. They put like years and years and years of data, and these people, these geniuses, these mathematical arithmetic geniuses make these formulas that have years of data, and they just fit. And so, yeah, as you see off of us testing it about 3 times, it always comes to one of these points to let us know if it's still in the uptrend. And currently, after that whole trend, it's right now at the 50, but that's a large amount of growth. So
leave it there, Malc. I want to ask a question just to make sure I understand.
Go ahead.
Because I think I got it after you explained it that way. So basically, if I'm looking to buy after November, because I got this data here, my chart looks like this. Let's say it was whatever date this was, and I was ready to buy. What the Fibonacci scale is telling me is that even though on this date the stock price was around, let's say 34, let's say I'm on a day where it was at 34, there's a chance that it could go as low as 26. There's a 23% chance that it could go as low as $26.
No, you're correlating you're correlating that percentage with the chance of something moving. That percentage is merely price movement in the retracement. Like if you went up to 100, the 23 or 23% range would be like $77.
Okay.
Yeah.
It's
but
not,
okay, so what I'm go ahead, Malc.
It's not a predictor. It's telling you what happened.
That's what I'm trying to figure out. Okay, so it's saying that in the past, this $26.01 line has been a significant line of support or resistance.
No, it's saying wherever he's moved this chart all around. You remember?
Right.
It's like wherever that starting bottom point is, that's where you're saying the trend began. And then you push and you move that top circle point at a point of resistance of it, or at a max of it. Now, if you put it at a max, or what are they called? Highs or whatever, or resistance, that'll give you an idea. Okay, if it breathes or if it sells off, if it's still an uptrend, it can stop at like this 23% range, or it'll stop at this 38% range, and maybe even go at that 50. But once it starts going below 50, now you know or realize this might not still be an uptrend.
Okay.
It gives you an indication that, you know what, it's bypassed the support of a 23% retracement. It's bypassed the support of the 38%. Let's see what happens at this 50 to see if it's actually still trending. You know what I'm saying?
What you're saying is these numbers are based on a formula that we don't need to know. We just need to know how it works.
Yeah, pretty much.
I'm trying to figure out how they got these numbers, but I'm gonna just stop and use it for. All right.
Nah, I wouldn't stop. I would just go on and research it yourself, because sometimes that makes it click even better.
Facts. Okay, but I get the concept.
Hey, what I also peep too, that'll help us instead of having to count the lines on the option. Like, say hypothetically, this ain't really a good one.
Bro, that's exactly what option traders do. They'll find an option with that strike price at those Fibonacci levels. They'll be like, or resistance and support levels. Yeah, go ahead.
I'm thinking, like, say you wanted to run this time, instead of saying like 1, 2, 3, 4, 5, 6, counting all the candles, go to the bottom one, go to whatever top one you want. It tells you, I'll go here. Where'd it go? That little gray box. It's a gray box that tells you the number. See, like from here to here, that's 20 days, 14 trading days. It's up more or less $14. So if I'm looking for that same $14 spread, it was 20 days. I need to do an option for 4 days. You feel me? So it helps you without counting, and you can see the spread, and you can see the amount of days that it took to get to that spread. The more you move it, they all change. I'm gonna definitely use that too.
I'm gonna definitely do a deep dive on this week.
Yeah, it's one of the more common little quick jumps people use to see how much of their asset retraced. And if it's in that 23 to 38% range, they're fine. They're happy. They know that money sells. They know they gotta let it breathe.
Can I change that color? Yeah, all right. All right. I'm burnt, fellas.
Oh yes, it's been time for me, but like I said, I could talk about this for days.
This was a good one. This was definitely a good one.
Kellz gone.
Bruh. Hello, brothers.
Literally, bye.
We had a barn burner.
Yeah, it's time to go.
Damn, gone. I seen them. We'll see you next week, though.
The camera. Yeah, they see me.
This screen about to go black.
Be like this. So look.
Oh man.
Any last second? We ain't asked them. Anybody watching? Is there anyone you want us to review before we go? Whoever's watching.
I'm about to go.
Oh,
there it is.
You see how fast he hit that mute, boy?
Oh,
one of my students, you hear one cut, but in the background, they ready to hit that turbo mute, boy.
All right, well.
Just a quick call out. Today, I'm gonna add the time stops on YouTube. I didn't do it last week. I'll do it this week, so that people, if they want to rewatch it, they can go to our picks of the week, the learnings from last week, whatever, like the main milestones. Also, I said it at the beginning, but we are working on having some type of mailing list so that people who are interested can get some of this information weekly. We also are thinking about an ebook, a free ebook and a paid ebook. So we'll keep working on that, and we'll get it out to the people as soon as possible.
And if you send me the timestamps, I can put it in the description on YouTube.
You safe?
We'll talk about it because I can, like we talked about last week, I can do it myself. I just need to be able to log in.
All right.
So, yeah.
All right, cool.
You good, Dev? The way she walked
Yeah.
out, that
It's over. It's
Yeah.
over.
she walked out. Yeah.
All right, man. We going. See y'all next week.
All right, fellas.
All right, peace.
All right, y'all.